Morning.
Good morning, Mr. Commissioner. Mr. Commissioner, we are ready to proceed, but before we do so, there are some household matters that I would like to deal with your permission. I've always considered it part of my duty as the evidence leader in this commission to make sure that everybody is treated fairly and there is no improper interference with the work of this commission. Now, for the record, I have received yesterday morning, while this commission was in session, a letter via email from the Honourable General Holomisa. I've placed a copy of the letter before the commission, dealing with an alleged facility from VBS Bank to Dr. Machilla. Shortly thereafter, and while the commission was still in session, I received an email from a journalist asking me to comment on this letter. Now, for the record, in my capacity as the evidence leader, I became aware of this allegation a couple of weeks ago when I was informed by the PIC of a forensic report by Nexus stating that there was this alleged facility granted to Dr. Machilla. At the time, PwC was busy performing a lifestyle audit on certain people involved in the PIC, inter alia Dr. Machilla. I requested PwC to establish whether this was correct. And I also informed the legal representatives of Dr. Machilla that I've been informed of this, and I wanted their comment as a matter of urgency. I must further place it on record, as stated in the letter by General Holomisa, that this fact, or this allegation, let's rather call it an allegation, was not part of the Matau SC report into the VBS matter. PwC has completed the lifestyle audit, and they will represent the report next week to the Commission. But I can inform the Commission, I place it on record, there is no evidence of such a loan in the report.
There is no evidence of such a?
There is no evidence in the lifestyle audit report of PwC of such a facility being granted to Dr. Machilla. Dr. Machilla, through his legal team, also denies that he ever received such a facility from VBS Bank. But the forensic team of the Commission will follow this further up and complete our own independent investigation of these allegations. That is the first point I wish to make. The second point, Mr. Commissioner, is that I had an arrangement with the PIC board to come to the Commission next week because they requested an opportunity to make a presentation to the board. I was informed this morning by email, and I've placed a copy of the mail before the Commission, that they are no longer going to make this presentation to the board. The last matter is, the documentation requested from the PIC. Mrs. Lowe has complied every time with every request. And where documents were not delivered, it was not because of Mrs. Lowe not cooperating, but because of a lack of information given to Mrs. Lowe to provide the information. Even as late as yesterday, further documentation was requested. But I have agreed now with my learned friend and his attorney that this is now the end. There will not be any further documentation requested, and that we will continue with the evidence. And I've also agreed with my learned friend that to speed up matters, we cannot continue like yesterday. There are some allegations in the statement that's a duplication of what's stated later. So certain paragraphs will be considered to be read and confirmed by Dr. Machilla to be correct and part of the record. But my learned friend will deal with that. Thank you, Mr. Commissioner.
Thank you, Advocate Lubbe. Anything, Mr. Roloff?
Thank you, Commissioners. Commissioners, this is not the first time that untested and unproved allegations have been made against my client, Dr. Machila, through the medium of Mr. Holomisa. We have not seen, much less have we had an opportunity to study this latest allegation contained in the Nexus report, and we would welcome an opportunity to do so, Commissioners, because it's important to see the facts on which that finding is made, because it is puzzling and indeed concerning to us that a multi-million rand investigation conducted by Mutau SC failed to pick up something as glaringly obvious as a loan to Dr. Machila by VBS Bank. It's almost unbelievable that that could have occurred. But be that as it may, Commissioners, Dr. Machila has subjected himself to a lifestyle audit by PwC, and absolutely nothing untoward has come out of that audit, and that evidence will be presented to you during the course of next week, as I understand it. For the record, Dr. Machila rejects these allegations of a VBS loan as absolutely untrue, and he will say so in his evidence to this Commission. As regards the documentation, Mr. Commissioner, we don't agree with my learned friend that Ms. Villeneuve has provided documentation absolutely on time. Certain documentation has remained outstanding and is outstanding. There was no request for further documentation last night, but simply a summary sent of what the documentation outstanding still remains. And that, I understand, will be sorted out during the course of today.
Yes, thank you. I suppose one can say that it would be absolutely difficult to control what goes to the media from whoever. So I don't think the Commission itself can try and prevent that, except to say it would have been much better if whatever information there is rather given to the evidence leader than the media, so that that is properly investigated and be placed before the Commission. Otherwise, we've noted what the Council has said, and we can go ahead.
Thank you, Commissioner.
Yes, Dr. Machila, you remember the oath that you took yesterday?
I do,
You're still under oath.
I do, Commissioner.
You are still under oath then.
Thank you, Commissioner.
Doctor, yesterday we had reached up until the heading PIC governance in paragraph 52 in your evidence before this Commission. We're going to begin from there.
52.
Yes.
Yes. Thank you, Commissioner. I'm on 52 on PIC governance. I'll try to move as fast as possible and just focus on important paragraphs as far as possible. Changes in the government of the corporation were slow.
Just make sure that the microphone is closer, because there was a bit of a complaint that the TV people are not getting the sound right there. Yeah, I think it's fine. Yeah,
I hope it's better.
Yeah, I think it's fine.
Okay. It's not too close.
Okay. Yeah.
Okay. Thanks, Commissioner. Okay. Yeah. Transitioning from commissioners to a corporation was a bit sluggish, and so was the level of PIC compliance with the King Codes of Corporate Governance. In September 2007, 3 additional non-executive directors and 1 executive director were appointed, increasing the size of the board to 13. I was one of the executive directors. The talent recruitment drive continues to build the capacity to close skills gaps within the establishment. Retention and attraction strategies were developed, which included remuneration policy that was anchored on a performance-based incentive scheme. A balanced scorecard performance management system was introduced, and a long-term incentive scheme was introduced in 2009. On the technology side, we implemented HiPort as well as the Charles River front office system to improve asset management, and Compass Atlas to assist in the portfolio management of the equity portfolio. That's paragraph 54. In 2010, following an extensive asset and liability modeling that I explained yesterday, the GPF diversified its portfolio mix to include allocation to non-domestic assets, comprising 5% to the global listed assets, divided into 3% in global equities and 2% in listed bonds, and a further 5% to the rest of the continent was allocated. The addendum revising the GPF mandate is allocated and attached and marked DD2. Thank you. The process of implementing this mandate changes commenced immediately under my leadership as CIO. We took advantage of a relatively strong rand at the time, averaging about $750 to the US dollar between 2010 and 2011 to invest the 5% global allocation in passive strategies with the biggest passive manager in the world, BlackRock. Another fixed income portion was placed with the World Bank Treasury to pursue an active strategy in the G10 bonds plus US agency-backed securities as a benchmark.
Sorry, can I ask you a question about BlackRock? Is your investment still with BlackRock?
There's still a significant portion that's still managed by BlackRock.
And what approach have you taken to consider other international investors?
There was a process already when I left of identifying managers that could diversify the portfolio into active strategies. One of the managers that we appointed already was Rubico, and the reason there was that after a very open tender process, Rubico won because of the systems that they were going to provide to the PIC, giving PIC ability to manage global mandates from within the PIC on a passive basis, and then also the ESG component, which they were going to provide a platform for.
BlackRock has then been your choice since 2010?
Excuse me, Commissioner?
BlackRock has been your choice or your investor, your global investor since 2010?
It is very important to highlight they were the biggest in terms of passive strategies.
I know who BlackRock is. Yeah, I'm
yes.
asking you whether there was any approach to look at others or whether you continued with BlackRock. Was there review? Did you look at it in relation? How was it chosen in the first place? Is it in perpetuity? What is your contract with them? Are you comfortable? I mean, those are the matters that are there. Are you comfortable with the returns? Nobody's questioning the capacity of BlackRock. We know who it is. Yeah. The question I'm asking is whether, if you looked at, and you've said Rubico with a slightly different mandate, was that in 2018 that was agreed?
We started with BlackRock because it was easy to get into passive strategies with a strong rand, moving the money.
Sure.
Over time, we have put a plan in place to start diversifying that exposure from BlackRock to other active strategies, including RobicoSam, as I've highlighted. So there is a process of moving away or reducing the exposure to BlackRock over time. It's also very important to understand that BlackRock is a passive investor, so they just track the benchmark. And so the idea is to now diversify into other strategies. Thank you.
Just a further question here. In terms of the World Bank Treasury, how do they compare with the other sort of private asset managers?
Commissioner, they've done well. I think they are good at what they know best. The government agencies, G10, very specialized in nature. But you can see that the benchmark is a little bit narrow, so we needed to create another product, like a completion fund, that if you mix it with the World Bank Treasury strategy, you then get closer to the appropriate tracking error, or you're within the appropriate tracking error. So we've created completion funds to make sure that they are relevant to the portfolio mix.
Just to clarify, with BlackRock, there was no beauty parade. How did you arrive at choosing BlackRock?
We've had a very long-term relationship with BlackRock, starting from 2003 when I came into the PIC, though there has been a lot of exchange of information and support from them. So it was logical for us to provide them with an opportunity to house or to give us a transition as the biggest, as I said, the biggest passive investor in the world.
Yeah, I'm not questioning that. I'm just asking whether there was a process, or was it, as you've indicated, that it was, we had a relationship with them and therefore gave them that choice. You didn't look at others.
That's absolutely right. Thank you, Commissioner. I'm on 57. The process of building capacity, systems, processes to implement the GPF non-domestic allocation took center stage. Development of the Global and Africa Investment Strategy started. Brian Molife's contract expired on the 1st of April 2010, but he stayed until July at the request of the board. Ms. Ntoba resigned from the board in October. This was the first commissioner to leave the PIC after a very long time. On 59, Commissioner, although it was just a few months, I was appointed the acting CEO of the PIC by the Minister of Finance until the new CEO commenced duties in February 2011. I was appointed to that role on a permanent basis in 2014 until 2018. Some of the significant transactions concluded while I was acting CEO were the unwind of the MTN employee scheme that was put in place in 2002 and matured in 2009. We are proud that it was able to give about 3,200 employees direct exposure to their company. They became shareholders. And most importantly, PIC earned 14 billion in profit out of that. Chair, 60.2, strategic intent, very straightforward. This new vision was put together in a process that allowed participation by all employees. And in the end, we agreed on a new vision that says to meet or exceed our client investment objectives and commitments to all stakeholders. That's what our vision became. And then I've highlighted the mission, which I can consider read, if it's okay, Commissioner. 61, under my tenure as CIO at the time of Mr. Molefe's departure, assets under management had grown from 910 billion as of the 31st of March 2010 compared to 308.7 billion on 31st of March 2003 when I joined the PIC, representing about 6.7% of compound annual growth rate in 7 years. This stellar performance
Just as you've dealt with in previous, in terms of 61, as in previous, the factors there that would influence this was the rate of economic growth, the questions of the global climate, and obviously an impact of 2 years of the global downturn, if you're looking to 2010.
If you look at 2010.
To 2010.
Yeah.
But it would be the similar factors as before which would have influenced the return.
But in addition to that, I need to highlight the importance of the strategic asset allocation. If the portfolio is not structured properly, the strategic asset allocation is not designed properly, you may miss out on such a boom.
Absolutely.
Thank you.
A further question here. Just going back, just in terms of the values of the PIC then, how were they decided? I mean, was it a group exercise? And, because values play a big part in the corporate culture. How did you come around those
was
5 values of
yes.
integrity and accountability and those ones?
This was a participation by all employees at that time. I think the project ran for almost 8 months or so. with employees engaged on various themes, various competitions within that until they arrived at this value. So it was very, very inclusive, very inclusive.
Sorry, can I just ask, and that was in 2014?
This is now 2008, 9,
8-9?
because these values then were launched whilst I was an acting CEO around 2010.
Okay, so just to, so this was all done 2008, 2009?
Yes, by and large 2009, those were completed and then implemented the following year in 2010.
What, and you're saying, you're indicating that there was full participation of the employees at that time?
Yes.
Enthusiastic?
Enthusiastic.
What happened between then and the culture survey that took place where people were at a 30% participation in a fear-riddled PIC, as has been reported in other testimony before the committee? What do you think changed? If you want to deal with it later, that's fine, because we should be dealing with the culture survey. But it's very significant that at the start, when you're coming in, and you're acting CEO, and there's a great enthusiasm in the 10 years subsequent to that. What ended up in the PIC's non-participation by employees in a climate of the culture of fear and victimization? And I'm quite happy if you want to deal with it later.
Yes, I think we will deal with it later, but I must highlight that we can look at it in phases, because in around 2000, I think it's around 2014, 2013-14, there was a climate survey that was conducted as well, which I believe was, the participation was fairly good, and the result, I think, were presented. We'll discuss those later. And then the latest one that was done in 2017, where we begin to pick up problems in terms of participation. I think we can deal with that later as well. Can I proceed? Thanks, Commissioner. PIC 2011-2014, again, I will consider this read. This is a period under Mr. Masilela. He took over in 2011, and really his focus was on making the PIC great, and he defines great as consistently delivered returns and exceed client expectation, be a benchmark for public and private sector asset managers, be a best partner locally and in the continent, and increasing investment for growth, be an effective piece, be making PIC an effective piece in the South African social security system, and most importantly, for clients, reducing cost of asset management services. So this is essence what Mr. Masilela focused on successfully. Key appointments.
Just another question. Let's go back to the values. There's a concept of values-based leadership, values-based leadership. What do you think of the concept, and do you guys believe in that concept or not?
In short, I do believe in that. I do believe that. That's why we put together a set of values that we thought will guide the culture at the PIC.
Was that a driving force within the company, or the leadership was focused on other things besides the values?
Commissioner, I'm speaking for myself now. Values have always been important for me. And trying to live the PIC values is something that I have done throughout my stay at the PIC. And most importantly, with the hope that my colleagues will follow me in this kind of behavior and also live the values. So we create an appropriate environment for everyone to thrive and contribute to the company. I can only speak for myself in this instance.
All right, thank you.
Commissioner, on 64, we saying the PIC undertook a review of its governance to align it with King 3 codes. The PIC established a social and ethics committee in line with the requirements of the Companies Act of 2008. 65, important appointments. Ms. More and Ms. Petro Decker were appointed Chief Financial Officer and Chief Operating Officer respectively. These appointments, I'm glad to say, improved the gender balance of the Executive Committee quite considerably. Regrettably, Ms. Kekana left the employ of the PIC on the 1st of July 2011.
Sorry, can I just ask you there, in relation to investment with Ms. Kekana's husband, I understand it is, Mr. Malosi Kekana, there was the Pareto deal, which was for the sum of a 24% share in Pareto, which was wholly owned by the GEPF. There were a number of consortiums that came with that particular deal, but in that, Belalani, which was the company of Mr. Kekana, also was paid a promoter fee of 50 million and an equity raising fee by Pareto for 74 million. The amount raised was 4.3 billion, but the question becomes, why would you have paid an equity raising fee for an entity in which you are taking a stake, in which they should, what was the basis of paying that 130 plus million to that?
No.
That's 120 million rand for one deal.
Commissioner, if I may, can I deal with that separately later on as part of response to different deals?
You may with pleasure, as long as it doesn't get slipped through the
Absolutely,
cracks, 'cause it's not
absolutely.
on the list.
We'll deal with it
Okay.
at that point. Thank you.
You'll make a note of it to make sure that you deal with it.
Okay, thank you. Commissioner, I'm now on 67, paragraph 67. In 2011, the PIC celebrated a rare and auspicious event in the world of asset management. It turned 100 years. At this celebration, the PIC investment plan into non-domestic markets was presented, with a particular focus on Africa to create public awareness on the PIC's mandate to invest in non-domestic assets. Mr. Masilela was appointed to serve on the United Nations Global Compact Board, thus ensuring South Africa and the PIC became an influential player in the strategic direction of the UNGC. Our centenary year also saw another major milestone being achieved. On the 31st of March 2011, the PIC's assets under management exceeded 1 trillion.
Dr. Majila, if I can just stop you there. At that point in time, were you still the acting CEO or were you the CIO?
I was now the Chief Investment Officer,
Okay.
now that the permanent CEO was appointed in Mr. Masilela.
So this milestone was achieved under your leadership as the CIO?
Yes, yes.
Obviously, under the leadership of Mr. Masilela as the CEO.
Yes.
Dr. Machila, do you have a book within the PIC? Was a book prepared to celebrate this 100 year? I think we saw the presentation, but was there a book? I know that Sanlam actually did a 100-year book to celebrate their centenary.
We do have one. I think there's a summary on the website as well. The annual report of 2011 also has a fair amount of write-up on the history of the PIC.
But you do have a book written, about the PIC, the history and all that, no?
Yeah, it's not a book as such.
Yeah.
It's more the annual report, and I'm
The
sure
annual report.
the communications guys
Okay.
can provide you with that.
All right.
Yes.
Okay. Thank you.
Thank you, Commissioner. Commissioner, 69, another exciting development happened barely a month later when the GPF launched its developmental policy that provided broader guidelines on the allocation of the 5% mandated to drive crucially important socio-economic transformation and responsible investments. This is now the enhancement of the easy buyer mandate, in other words. The sectors to be invested in were economic, infrastructure projects, social infrastructure projects, green energy, initiative aimed at job creation, enterprise development, and broad-based black empowerment. That's what we call DI from now on. Properties, that's now 69.1.
And can we just place on record that the numbering should be corrected?
Yes. Yes. VNA Waterfront, the partnership, the PIC in partnership with Growth Point Properties, the listed company, JSE listed property stock, bought back 100% of VNA from the Middle Eastern investors. Transnet controversially sold the VNA site in 2006 for 7 billion to London and Regional Properties, the Emirati investment firm Dubai Wealth, and several South African black and economic empowerment investors. The PIC and Growth Point paid about 9.7 billion, and the deal was concluded in February 2011. The investment is currently worth 18 billion as we speak. We believe that this partnership is a great model for strategic partnership between PIC and a top-class JSE listed company. This partnership has turned VNA into a truly iconic property in Africa. 69.2. Okay, 70.2. The formation of PIC real estate asset managers, which we call PICRIM, through the amalgamation of Advent Asset Management into the PIC Properties Division, as well as the acquisition of CBS Property Management Business. And we did transactions in the rest of Africa. The first one was the EcoBank Transnational Incorporated, ETI investment. It was announced in May 2012. The PIC invested $275 million to acquire 19.53% of ETI, a bank holding company based in Lomé, Togo, and operating in more than 33 countries at that time. The PIC saw this investment as a significant launching pad for its investment strategy throughout the continent. This was followed by a 300 million investment in Dangote Cement in July 2013.
$300 million.
$300 million indeed. This investment were very much in line with PIC's Africa investment strategy of investing in companies that had the potential to grow into Pan-African champions in their sectors or areas of strategic focus. This portfolio by design, I'm talking about the Africa portfolio, was to have a high concentration of stocks that are exposed to key sectors that drive Africa's growth.
A question here would be, why didn't you start with a passive strategy in Africa rather than this focus strategy? You know, that will be an interesting question to understand why.
If I may, the markets in Africa are still fragmented at the moment. Even up to now, I don't think they have improved quite significantly. The biggest market is in Africa so far is Nigeria in terms of the stock market and many other things. And if you look at the Africa benchmark itself, you know, the way it's constructed is dominated by Nigeria. And if you go into Nigeria's stock market itself and look at the index, you'll see that it's got lots of banks, oil and gas, and so on. That reflects, of course, the economy of Nigeria. And so you run into problems in trying to create a passive portfolio because creating a passive portfolio assumes quite a number of things, including liquidity issues, free float, and those kind of technical aspects that makes it easy for someone to track the index. With Africa, it's quite difficult. In fact, we went in knowing very well that even in companies that are listed, they behave almost like private equity. Some hardly trade. We have EcoBank itself, a big bank, but if you look at its liquidities, it's almost non-existent. Listed in 3 stock exchanges, in Ghana, Cote d'Ivoire, and Nigeria, but trading is very thin. So you run into those challenges in trying to create a passive benchmark for Africa.
And still today,
it's still very difficult today. If you have to do that as well, because it's important to have the right characteristics and properties in a benchmark.
Yeah.
That gives you, an appropriate exposure, less concentrated, so that you are able to capture the economic theme that is developing. Yeah. So you're not going to be able to get that quite easily. You end up having to design a portfolio customized to your needs, giving the right exposure. So that's what compelled us to put together a fairly concentrated portfolio that is exposing the PIC to the right economic themes and growth.
In the themes and the demography and all that. Okay, I understand.
Absolutely.
Okay, yeah,
Absolutely.
thank you. Thanks. Now I understand.
So if you look at the two
I was wondering, but now I do get it now. Yeah.
Thank you, Commissioner.
And we'll deal in detail with EcoBank later.
Yes. Commissioner, I'm 172, fund investment panel model. On about the 3rd of November 2011, the PIC received a letter from the GPF that instructed the PIC to change its operating model of unlisted investments. Clearly, this letter was expressing frustration with the PIC's approach to investing in unlisted investments. I think I spoke about the slow transitioning from commissioners into the corporation and those kind of challenges. And so this led to the frustration from the GPF that we cannot do unlisted investment in a model that's almost the same as the commissioner's model. And so they implored us to try and move closer to a private equity model that has been proven to work globally. And so the GPF proposed a standard private equity model whereby the PIC will create private placement memorandum which are similar to investment strategy document for a particular theme. For example, it could be economic infrastructure. You create a private placement memorandum or investment strategy for that. Manufacturing, you create an investment strategy for that. Affordable housing, and other similar sectors. This proposed model was supposed to yield the following benefits: efficient and effective delivery of unlisted investment mandate. Specialization, I spoke about social infrastructure, affordable housing, health, manufacturing, and so on. Skills, attraction, and retention. So moving away from the corporate, but putting PIC in almost like a private equity kind of operation for unlisted investments. That will assist in quicker turnaround and, most important, alignment of interests of management the client needs. Because we envisaged a model that will push the management to perform and incentivize out of this performance, and thus aligning with the interest of the clients. And then investment philosophy and further diversification of the total portfolio. So the PIC now in 73, in response.
Sorry, Doctor, yeah, I was looking for that letter, but it's not attached as an annexure, so I don't know the letter from the GPF of November 3rd, 2011.
Commissioner,
not-
will make it available to the Commission.
Okay, yeah, please. Please.
Excuse me. So the PIC responded as follows. I'm on paragraph 73. The fund investment panels, the FIPs, were then created by the PIC in response to the GPF's demand. The FIPs would be subcommittees of the investment committee. The fund investment panel are as follows. We created the Private Equity and Africa Fund Investment Panel, Social and Economic Infrastructure, Environmental Sustainability Fund Investment Panel, Priority Sector and Small and Medium Enterprises Fund Investment Panel, finally, the Property Fund Investment Panel. So there were 4 fund investment panels to drive that specialization. Experts were appointed in line with the requirements of the GPF for each FIP as per GPF requirements. People who were appointed there were Ms. Sandra Beswick, Ms. Lindy Toy, Ms. Tsepiso Kobile, and Mr. Fungai Ruende, after an extensive process of inviting the public to participate in this and choosing people who we believe were suitable for the different fund investment panel.
And were any of those people at this point in time board members, and did any of them become board members at a later point, non-exec directors?
Yes. This commissioner were not directors of the PIC at that point. They
At
became
the time
experts.
they were experts?
Yeah, they were experts, but later on, I discussed it. The experts were then appointed non-executive directors of the PIC at the later
Out
stage.
of those 4, who? Ms. Beswick, Ms. Toy?
Only those 2, Ms.
Who
Beswick
became-
and Ms. Toy.
Do you remember the date?
I can't remember
Okay,
the date,
we'll
but
come to
we'll
it
find.
later.
Yeah.
And the question then is, as NEDs, their roles on the FIPS or the investment committee did not change. They continued to serve on the investment committee or to chair different FIPS?
Absolutely. They became non-executive directors and were allocated responsibilities in line with the board charter.
If I understand it correctly, the board members, non-exec directors, had roles in 2 areas, well, 3. Your standard committees, your audit and risk, your HR committees, which would be normal functions of a board, non-execs.
Absolutely.
But in addition, they served, perhaps not all members, but in different ways on the investment committee and then on these 4 FIPS.
Absolutely.
So in that process, this started at the outset, and that's why the date matters. This was at the time of establishing the FIPS. They were not non-execs, they were experts in those fields.
That's correct.
Okay,
That's
but
correct,
at that
Commissioner.
time, the investment committee still had non-execs on it.
Investment committee still have non-exec on it, but most importantly, none of these people participated in the investment committee.
No,
They
no,
were
I
only
understand
confined to the
FIPS.
FIPS, yes.
At
yes.
that point.
At that point,
Ah,
yes.
thank
yes, yes. AfriSam restructuring, if I can continue. Paragraph 76. The PIC concluded a BE transaction in 2008 whereby it provided funding of about 6 billion to acquire 85% of South African business owned by Holcim Cement and Avenge Group in a highly leveraged financing structure. Due to the global economic crisis that started at the end of 2008, the domestic economic environment deteriorated very rapidly and thus negatively affected the cement industry and the broader economic environment. This resulted in significant erosion of the value of PIC investment in AfriSam. By 2010, the valuation on the original investment had dropped to about 1.2 billion from 6 billion. In response to this negative situation, the PIC board instituted a process of restructuring of the AfriSam balance sheet to save it from total collapse, which would, without doubt, have resulted in job losses measured in thousands. The PIC board put together a restructuring team led by Mr. Zakele Sitole, a non-executive director, as a chairperson, Ms. Eike Kana, Dr. Dima Chila, Mr. Inesane, Mr. Mula Mevin, and Ms. Marde van Veek. The restructuring was concluded in 2013, and I'm extremely glad to say that about 2,000 jobs were saved. So it's not the first time that the PIC is involved in saving jobs. The restructuring process entailed the PIC exercising its lien on the BE shares it held as security consistent with the legal rights it had. Simultaneous with this, the PIC acquired AfriSam bonds that were traded in the open market to enable to have a seat at the table of creditors. The collapse of AfriSam created a serious tension between PIC and the GPF at that time. But Mr. Masilela arrived at the right time. He was instrumental in reducing this tension by improving communication channels, which resulted in a better understanding between the PIC and the GPF. Mr. Masilela, before he came to the PIC, was a trustee of the GPF.
Sort of, at that time, who were the chairperson and the principal, the PO at the GPF at that time?
At the time, the chairman of the GPF was Mr. Arthur Moloto, and the principal officer was John Oliphant, Mr. John Oliphant.
Can I just ask a few details about this? Because as far as I'm aware, it does not come later into the specifics.
Mm-hmm.
The investment in equity was in 2008, right? The investment in debt was 2012, and the total investment was 12.6 billion rand. In 2014, there was an investment in Tango, which is in Tanzania, if I'm correct, of US dollars about 100 million. All of this is underperforming, even as things stand, from what I understand. So just looking at the investment of over 12 billion rand, and I agree, it's very important to save jobs, but that's 2,000 jobs were at 12 billion rand plus to save that, and it is still non-performing. How do you deal with an ongoing investment, 3 different investments, roughly 4 years and 2 years later, into one entity that has been problematic from the outset at that scale? What were factors of risk would you have taken into account, bearing in mind that obviously return to your clients is important, and that the Tango investment is one into the continent that is also then a little problematic, as I understand it, as a non-performing?
I think if I can respond in broader terms here, the understanding of the role that AfriSam plays in the broader economy, it's quite significant. We can be looking at probably 2,000 jobs at AfriSam itself in isolation, by the understanding that it's placed in the infrastructure. And what is very challenging has been the economic environment in South Africa in general. Investment in infrastructure has been sluggish, if not there. And so AfriSam is not the only one, the only investment that is suffering or that has suffered throughout the period. We know that all the other cement companies, whether it's Avenge, Group 5 and so on, that we are invested in as well, have taken a huge knock. Now, it's well and good to say an investment is bad in hindsight, because it's perfect sight. But at the time when we were doing investment, everything looked rosy.
No, but there were 3 different investments. I mean, yes. I can understand that on the first, but if you then invest a couple of years later, you've got the lesson of the first. And then you invest again, you've got a lesson of the third. I understand the economic issues. I'm asking in relation to risk, reward, returns, investments, and has this actually been impaired on in your accounts?
It would have been impaired. It would have been impaired, definitely. But my argument is the one that says every time there is an additional investment, there is an investment thesis that drives that says the world is going to change, it's going to get better, and therefore to save this company or to pull it out of the doldrums, we can put in additional cash, fix the balance sheet, do any other intervention that is necessary to put it back on track. But if the economy is not responding, unfortunately, we'll have the problem. There are many instances where we do forecast and we get it wrong in investment. And it's very important to understand that our portfolio is not a single asset portfolio. There are many other assets that have responded quite well, delivering good returns to a point where on average we have outperformed benchmark. That's the beauty of diversification. You'll get some wrong, you'll get some right.
Yeah, I understand that. You don't have to go there so into such, you've said it before, the diversification, we accept that. I'm talking specifically here about a repeated investment which resulted in your paragraph 80, that the GEPF placed a cap of 2 billion on the amount the PIC could invest in a single asset in the future. Is that cap still in place?
This cap is still in place. I think they even wrote again to emphasize that it has to be respected.
Does
What
that
is
not
important?
reflect-
What
does
is
that
important?
not reflect a question of concern about this particular investment?
If I may, this 2 billion was as a result of the very first underperformance of AfriSam. At that point, the mandate was loose in terms of single obligo or single exposure assets, exposure to a single asset. It wasn't clear. And the GPF felt that they should refine their mandate to put limits now on the amounts that we can invest in. And the fund investment panels that were created, I spoke about these placement memorandums, which will come in small chunks. Although the GPF has allocated 5% to unlisted investment, it does not give PIC a free hand to invest as they please. But the investment of this 5% is now regulated via these PPMs, or small chunks of investment strategy, mostly of the order of 5 to 10 billion. And within that PPM, there will be further limits on how much that PPM can invest in a single asset, normally 25% of the amount that is raised. So it puts further restrictions and further limits, and therefore better diversification of each of the PPMs. So Commissioner, on AfriSam, you said 3 times, and we say the first time everything looked rosy, stadiums were going to be built, the economy was going to grow, and there was a global economic crisis which affected the whole world. AfriSam collapsed. We restructured the balance sheet, and that required further injection of capital in fixing the balance sheet at that point. That's why we added probably another 4 billion or so in the process, buying bonds, which we then converted into equity later on to further improve the balance sheet of AfriSam. The economy has not come out of the doldrums. It remained there. The construction sector has taken a pain up to now. Group 5 and others, some have been put in liquidation as we speak. So it hasn't been a great environment. Tanga, again, the Africa story. We know what happened. When we did the transaction, everybody was talking about lions on the move and so on, Africa growing. And unfortunately, that was not the case. So we got it wrong. And then even the best asset manager gets it wrong at times. But what's important here is the amount of diversification, ensuring that stocks that don't do well are covered, fully covered by those that do well because of economic environment. Commissioner, can I proceed? Okay. Commissioner, I'm now on 81. I think let me deal with 80 because I think Commissioner has raised it. Just to read in the record, the fact that throughout the world, not even the finest mind in finance were able to predict the global financial crisis of 2008, its impact on the assets under management was severe. The GPF responded to the AfriSam crisis by reducing the concentration risk in the unlisted portfolio by imposing a cap of 2 billion on the amounts that the PIC could invest in a single asset in the future. Also, that any investment above this figure had to be approved by the GPF. 81?
Yeah, just a question there. You mentioned the number of PPMs. What kind of number do you have of the PPMs? How many do you have with the GPF or you had with the GPF?
I'm sure the PIC former colleagues will give more information, but I remember in 2013 when we concluded we had 3. There were 2 that were still being negotiated. Unfortunately, they were not finalized the following year, but we started another new round of additional 5 other PPMs, raising close to 70 billion. I think those were approved sometime in the course of 2017 or so. So I would say probably 8 PPMs, but I'm sure the PIC can assist with the correct number.
3 old ones and 5 new
Yes,
ones.
if
Okay.
my
All right. Okay.
But let the PIC assist us in that.
Can confirm the actual
Yes.
number. Yeah. All right.
Yes,
Thank you.
Commissioner. Commissioner, on 81, the acquisition of Independent News Media, INMSA, by Sekunjalo Group was concluded in August 2013. This transaction was funded by the PIC and the Chinese. This is discussed below under specific transactions. 82, conclusion of the investment in Lanseria Airport through a co-funding arrangement with PIDF. That was the first time that we co-financed a project with PIDF in the domestic market. Approval of 1.6 billion loan to Tanga Cement, a subsidiary of AfriSam, based in Tanzania. And then we participated quite actively in the renewable energy projects. Excuse me. Governance challenges. The delegation authority during 2010 onwards gave the CIO a fair amount of authority on investments. The CIO chaired PMC, while the CEO chaired EXCO, but the CEO was also a member of the PMC. This overlapping delineation of responsibility may have been the cause of some tensions that could have led to the polarization of investment and support services at the time.
Can you, I mean, this comes up time and again as we go forward. Do you want to maybe expand here on this tension, or you want to talk about it later? Maybe get a start on that one.
Yeah, I think I would prepare to talk about it later,
Okay.
if it's
All
okay,
right. Okay.
Commissioner. I also highlight on 85, tensions during the AfriSam restructuring may also have contributed to an unhealthy relationship between some non-executive directors and the CIO at the time, which is myself. The CIO, although in support of the restructuring of AfriSam at that time, did not see the idea of introducing a strategic partner at a low valuation at that time. 86. The decision by the PIC board to make PIC real estate managers, that's PICRIM, a division instead of a subsidiary similar to Harith, did not go down well with some non-executive directors who were intimately involved in this assignment. This led to a huge turnover when Properties Department became a division instead of a separate entity. A lot of people left the organization. The mood at the PIC was bad to a point where the PIC board decided to conduct an employee climate survey. Deloitte was appointed to conduct this survey. A copy of the survey is attached and marked DD3. The report highlighted employees' view about weaknesses of the PIC, some of which were unfair reward and recognition system, poor communication, including arrogance and bad communication style by some non-executive directors, poor leadership, inconsistent application of policies and procedures. Commissioner, I want to highlight that there was very little concern about PIC governance structure expressed by employees in this survey. This is contrary to Mr. Jack's statement to this commission.
Dr. Machila, if I can interrupt you there, if you can turn to Annexure DD3, which is pages 47 and 48 in the Annexures bundle. Thank you.
Mr. Commissioner, just for the record, the letter previously referred to by the witness has now been printed. Copies have been placed before the Commission.
Thank you. It's marked Annexure 2.
Page, Annexure DD3, pages 47 and 48. This is a copy, Doctor, of the climate survey which was conducted. Is that correct?
That's correct, Commissioner.
Sorry, and that's DT what?
DD3, Mr. Commissioner, paginated pages 47 and 48. And the results of the survey are dealt with on page 48, is that correct?
That's correct. That's correct.
And one can see in those results that there is very little, if anything, about governance.
Absolutely. The only relevant issue in terms of governance here will be policies and procedures, which in my view scores almost in the middle, around the average.
Thank you, Doctor. Would you then proceed with?
Sorry, can you just give us the date again of this survey? Because it's not dated on the document.
The date for the survey?
I think that
If you don't have it, if you could obtain it for us and give it to us later.
We will get it, Commissioner.
Just another question here. This survey was done some time back, but we have a recent one, I think it's the Deloitte one, done in 2017. And if you look the second page, if you look at the bottom of the second page, and the mean scores there, the scores, marked from, 0 to 5, rewards and recognition, crops up quite as a big thing in this survey, this annexure, and the new survey. And then the other one, I think, is communication or so. So there are there are things that have been problems, it looks like, from the past, and they still continue to be problems which haven't been solved. I don't know whether you know those two surveys and how they compare.
Yeah.
Do you want to comment about that, maybe?
I think I can.
Because it never crops up again, so maybe we should deal with it now.
Yeah. I think if you look at the statements that were presented to this commission by Mr. Chris Polwani, I think, from the our HR executive, the issues around remuneration were by and large to do with balanced scorecard issues. And this moderation process that some employees felt that it was not done properly. And I think he went in deep detail to explain the model, how it's done, and my role in this as the CEO being involved only at a point where there are grievances. Most of the issues dealt with EXCO and executive management, HR, and the others, you know. So I always, you know, that has always been a problem in terms of how do we apply this balanced scorecard process fairly. There's always has been a gripe around that. But again, to be honest, I'm yet to come across an employee who will say, I'm happy with my salary, including myself, but you contend with what you get, you know. So it's you know, it's natural for people not to be happy with their salaries. But application of policies and procedures has always been a concern from the employees.
Next one would be sort of, I think it's recruitment and selection. What could have been the issues there in that survey?
Again, it may be having a lot to do with the issues around promotion. How do you promote people? How do you select and so on? But by and large, I believe that this had a lot to do with promotion, the process of promotion at the PIC, you know, maybe there would have been areas where staff was not happy with the way it was done. I think there was also representations in this committee around promotions of certain individuals and so on that didn't go down well with some employees.
Yes, given this number 2.7, do you think this was a large-scale problem or it was limited problem?
I think it clearly shows that it's problematic, you know, because the participation in this one was quite good. I remember quite well. It was quite good. So it would be a true reflection of the feeling of employees at that point.
Yeah. And if we say there were issues with promotions, what do you mean? I mean, do you mean what? People were like promoted through friendships or what? What do you mean if you say there were issues with promotions?
I think it's the process. I mean, some people don't necessarily like to be subjected to interview process when they believe that that position is actually theirs. You know, they've been around in the organization, they've done several things, and therefore they are the ones who should be appointed to those positions. Once you say, let's try to get the best. If you are the best, you're okay. We'll give you the position. If you are not the best, unfortunately, we'll have to take somebody that we believe will be able to do the job. And that, you know, hasn't gone well with some employees, but it was PIC policy that at least we must, you know, open the position to wider participation. Not that there have been instances where lately we have allowed people to be absorbed in certain positions. I think that was explained, where somebody is in a position, we enhance it by putting additional work and we regrade, and it becomes a higher position that they've occupied because of additional responsibility. I'm talking about Rubina Solomon in this instance. What happened there, you know? So that is what the commission must understand, the difference between a position that is vacant and how we fill it, and a position that is enhanced because additional work has been put, additional responsibility has been placed on an individual or on the job itself, and the grading comes out higher than where it is.
What else besides the interviews? Because some people said that, you know, if Dr. Den and Ms. More favor you, you'll do well at the PIC.
Look, Commissioner, that's what had been said around favoritism, and I've tried not to be, you know, accused of favoritism. I believe I've given my colleagues a fair chance in terms of opportunities that are available, and we've supported them to make sure that if they don't have the necessary skills, they get trained to get to those positions eventually, to get appointed. So I believe we've acted fairly, but I guess I wouldn't say, you know, they are not telling the truth. I'm sure they have evidence to show that there was favoritism. Yeah. And from where I sit, those are things that have frustrated me, because I have tried my utmost best to encourage my colleagues that if they have issues, I need to know, you know, and whatever they tell me is confidential, you know, and so that I'm able to assist wherever I can assist. Yeah. But unfortunately, a lot of them have kept these things to themselves with the suspicion that they're going to leak, or they're going to be victimized, etc., etc. That's what has been said here. Yeah. But I've made it clear, even in staff meetings, that I would like to hear what is troubling them, so that we can create the right environment for them to operate and contribute to the organization.
Did you participate in discussions where you said, we like this one, we'll promote this one and give them more salary and bonuses, or we don't like this one is problematic, we're not going to promote them?
No.
Like, have you ever had such discussions with anybody?
I never got involved in such discussions. You know, if there's a position to be filled, there's a process that we will follow to fill those positions. Discussions will be around what is the nature of the structure that we want to be able to implement the client mandates, to be able to make the PIC effective in executing a strategy. Those are strategic decisions that I would have with the executive team, and we map out what we need, what sort of position we need, and advertise if we have to advertise to fill those positions.
Yes, I'm asking because one of them was Ms. Nomza Mopeche, who said that there were issues about promotion, and she did speak to you, but I don't know what you did about it. Can you recall that, Ms. Peche?
Ms. Peche, we met several times, and I think she was here. She explained her circumstances, which was as a result of a restructuring. And to us, it was clear that any restructuring, if we can do it in such a way that employees don't lose their jobs, the better. And if we are faced with that situation, there has to be alternatives, and give them the right support to be able to run with the new responsibilities. That is the case of Ms. Peche in this instance. And of course, she was not comfortable with the responsibility that she was given. But over time, we started looking at solutions for her. And when I left, or when I was asked to go, I think it's better that way. When I was asked to go, I was in the process of finding a solution for her. I don't know what happened after I left.
Yeah, Ms. Peche did say that she did speak to Dr. Majila. Do you agree? Do you agree that Ms. Peche spoke to you? The chair is asking.
Yes.
Yeah.
We did have several discussions. And Chair, as I said, when I left, we were almost close to getting a solution around her situation.
Yeah, thank you. I think we can make a move on now on that.
Can I just ask one question? You've referred to Mr. Polwani's statement, and as the person who deals with grievance and everything else, I would just want to know, do you support his statement here? You think that that is an accurate reflection of the HR matters?
Commissioner, there are other matters that I would say took me by surprise that were raised by employees.
I'm not talking about the employees. I'm talking about Mr. Polwani's reply to the issues and his statement before then. Not the issues raised by employees.
Yes.
I'm asking whether you are comfortable that Mr. Polwani represented your views of what the HR issues are at the PIC to the Commission.
Yes.
Thank you.
Yes.
I think what's important, I think you made a concession that some of those allegations may well be true.
Absolutely. Some of those allegations may well be true.
Yes.
What's important is that I was not aware until there were statements made to this commission in the last week, issues that were raised there that I was not aware of.
Commissioners, this subject is dealt with in Dr. Majila's statement at page 206, and perhaps since we've now raised the issue, it's appropriate to go to that page and deal with the paragraphs that
No,
he has
rather
raised.
let's deal with it then, when it comes through. I think.
As you please.
Yeah, we might have further questions and all that. Yeah.
Okay. 88. So I'm still dealing with governance challenges, Commissioner. 88, the refusal of the PIC to support the Chilean drug maker, CFR Pharmaceuticals, from acquiring Adcock Ingram around the fourth quarter of 2014 was another issue that caused tension between me and the Ministry of Finance. I was accused of blocking foreign direct investment in the country. However, as a CIO at the time, I felt strongly that the shareholder needed to be advised not to exert influence on how the PIC conducted its investment activities as it was highly regulated. All oversight functions were performed optimally by a troika of authorities, the FSCA, the clients, and the PIC board.
Dr. Majila, can I stop you there just on the issue of blocking direct foreign investment? In your view, were you blocking direct foreign investment, and if not, why not?
I think later on we discuss different type of investments, strategic investments, one of which would be investments that have a huge importance to the economy. Now, Adcock Ingram is known to be in pharmaceuticals and the biggest supplier of antiretroviral drugs, which are very important to the well-being of affected South Africans. So the CFR deal, we were opposed to it because of the structure. First, at the time, we were a significant shareholder in Adcock, close to 24%, of Adcock at that time. I'm talking about the PIC in this instance. Now, with the takeover of CFR, that would have reduced our shareholding to 0 because it would have been a 100% takeout. And in exchange of cash and script in CFR, we should have seen the PIC own less than 3% of CFR based in Chile, from being a 24% shareholder in Adcock, and be at the mercy of the board of CFR to declare dividend from Santiago. So we felt very uncomfortable, and also the premium, we didn't think that the premium was enough to compensate investors for such an important asset in the country. If they had paid a huge premium, we wouldn't have reason to say no, but we felt that the premium is not good enough to take control of such an important asset. We're also uncomfortable with the funding mechanism because some of the monies was going to be raised from the local banks. Now, script plus local bank funding is not FDI, in my view.
Thank you, Doctor.
The issues raised by the CFR Pharmaceuticals bid above prompted the minister, who was Minister Praveen at that time, to conduct a governance review of the PIC. The process was led by non-executive directors, with all meetings held in camera without executive directors. The terms of reference and appointment of a service provider were done outside PIC's approval process and procurement practices. There was a clear meddling by non-executive directors in the day-to-day running of the PIC, as demonstrated in Mr. Jack's statement to the Commission.
Dr. Majila, if I can stop you there, why do you say that there was a clear meddling by NEDs in the day-to-day running of the PIC?
I think Mr. Jack was here in his statement to this commission, said that he ran the governance review process, appointed a secretary, which was someone from outside, and ran these workshops. I think he called it an innovation lab, which in my view, I thought was now too much into management responsibility. It was almost like there was no CEO that could have been mandated or delegated by the board to do or to perform those functions like appointment of a service provider to do something similar to an innovation lab or any other intervention that was required to improve employee relations at that time.
And you say that subsequently the Auditor General raised concerns about the procurement issue of the service provider.
Yep. Absolutely. The Auditor General, on paragraph 94, the Auditor General raised concern about the procurement issues in the 2015 PIC annual financial statement at page 24, and he stated as follows, if I can read it into the record. Procurement and contract management, 19. A member of the accounting authority whose close family member had a business interest in a contract awarded to an entity failed to disclose such interest as required by PFMA section 50.3a. A person in service of the entity whose close family member had a business interest in the contract awarded by the entity participating in the process relating to that contract in contravention with PFMA. So our books were qualified at that point because of the conduct of non-executive directors at that point.
Let's go back a bit to the issues. So you mentioned a few tensions which arose, with the board, the Minister of Finance, and the NEDs. So what prompted this governance review and what was the aim of that review?
Commissioner, my understanding, once I had an opportunity to see the terms of reference of this governance review, it became clear that it was targeted towards me. The issues that were going to be tested and people who were going to be interviewed made it clear to me that this was more a personal vendetta than just a governance review. And I had a strong belief that if there was a governance review, it would have involved executive directors to assist in driving this process. If it was done transparently, we would have been the ones involved with the leadership of the CEO to deal with this matter on behalf of the board. But it was kept secret, and I felt it was directed towards me.
How do you say so? What triggered that you felt it was targeted at you?
The terms of reference were not shared with anyone. I was just lucky that someone decided to show me the terms of reference. And by the way, once I saw the terms of reference, I did raise it with the chairman at that time. I did raise it with the deputy chairman as well as the chairman of HRRC at that time, that I don't agree with what the board is trying to do, because I see it as something really targeted towards me.
So we'll sort of have a look at them again, you know, what Mr. Jack said, but what, I mean, like, how do you mean, did the board want to take power away from you? How would you summarize this targeting at you?
Look, Commissioner, I could only summarize it as, you know, a way of probably removing me from the PIC at that time, diluting the responsibility that I had, because one of the recommendations was around creating several CIOs for different sectors at that time. And yeah, I can only say that it was, I felt strongly that it was directed towards me, and I raised it with the chairman, deputy chairman, as well the chairman of HRRC, and also at the board meeting. The issue of, even of the procurement, we were clear that it was irregular.
And that's why Mr. Voyojek said you didn't want to participate in that survey, in that review, because he said he tried to, if I recall, he said he tried to get you to participate, but you didn't want to participate.
Yes.
He even asked the minister and the chairperson, but you were adamant that you were not going to participate.
Absolutely, and I didn't make it a secret, because I did discuss it, as I said, with the chairman, the deputy, as well as the chairman of HRRC, to raise my discomfort. Yes.
Okay, all right, thanks. I'm sure we'll get back to it, but yeah, I think for now it's fine.
Thank you.
All right.
92, the board conducted an investigation into the performance of the CEO at the time, Mr. Masilela. The report was kept confidential, and Mr. Masilela left in July 2014. As was widely quoted in the media at the time, no reasons were given about Mr. Masilela's abrupt departure from the PIC. While I was still CIO, when Mr. Masilela left, the assets under management had grown to 1.6 trillion, as of the 31st of March 2014 compared to 1.03 trillion as at the 31st of March 2011 when he joined.
The statement is billion. Do we change that?
Sorry.
Dr. Machila?
No, but it's 1,000 billion. Yeah.
Oh,
1605 billion, yeah. That's correct.
sorry, I used trillion. Yeah,
Okay,
that's why I was saying 1.6 trillion
Trillion, okay, yeah. all
and 1.03 trillion.
1.605 billion or 1.6 trillion then.
Absolutely.
Yeah, yeah, yes, yes, okay, all right,
Dr. Machila?
okay.
Are you implying in paragraph 92 that the issues raised by the Auditor General in paragraph 91 are connected?
I don't think they are connected. 92?
92
The
because...
departure?
Yes, because it reads on a person in service of the entity. I mean, if one reads this without any knowledge of who is being referred to in the Auditor General's report, and it's followed by the board conducted an investigation into the performance of the CEO, the report was kept confidential, Mr. Masilela left in 2014, the implication of juxtaposing those is that 9120 and 19 relate to Mr. Masilela.
Okay, I think, Chair, if I may, this as I said, this process of appointing service providers was done by non-executive directors, if I were to clarify that. Was done by a non-executive director.
Yes,
Mr.
you said
Masilela was
that.
the chief executive director of the PIC.
You
So
said
he
that,
wouldn't have-
but the way this
he
is
wouldn't have done-
juxtaposed, so I want to just be clear that 92 and the relate, because if you read the one paragraph after the other, it's open to the interpretation that it is referring the paragraph 92 to the issues raised in 91. Because one is a member of the accounting, who's close family member, a member of the
Yes.
accounting authority, whose close family member had a business interest in a contract awarded by the entity, failed to disclose. A person in the service of the entity whose close family member had a business interest in the contract awarded, failed to disclose. This does not relate to a non-exec. That relates to a person in a member of the accounting authority. So it's open to interpretation that 92 relates to 91. And I want clarity from you whether it does or it doesn't, because otherwise it is something that we would have to clear up in relation to Mr. Masilela.
Commissioner, they are not related. Apologies. They are two different. 91 talks about non-executive. 92 is what it is.
I'm not sure where 91 talks about a non-executive.
So to clarify, 91 deals with procurement of a service provider by a non-executive director, and is not related to 92, which talks about an investigation into the CEO. If I can.
So yes, that's fine, as long as it's clear then for the
Yes.
record that the two are not connected.
Yes.
And then when you're looking at it as an investigation into the performance of the CEO and a report that's kept confidential, you go on to show that assets under management under his tenure, 2011 to 2014, actually grew significantly, or an annual compound growth of 15.8%. Does that respond to the question of performance? Were you putting that in to indicate the level of performance under his tenure? Because there's an investigation into his performance that you report here. And yet, on the assets under management, if that was the only criteria used, it's a very significant growth and a good performance.
Thanks, Commissioner. Probably to clarify, maybe I should have separated the two to say that the performance of the company is this, under the leadership of Mr. Masilela. But there are other issues that the board was concerned about in his performance as an individual, which were not made public. That's why he left. So I wanted I should have separated that. All I'm saying is the PIC performed very well under his leadership. But there were other issues that the board raised which were not made public, and then he left.
That's fine. I just wanted clarity on that interconnectedness and the fact that this was a good performance, and therefore, whatever the board issues were, nobody knows it resulted in his departure.
Yeah.
But it's not related to the performance of the assets under management.
Yes.
Mr. Commissioner, is it a convenient time to take the adjournment? We've been going for about an hour and a half.
Can we proceed until 11:30? Take the break then, unless there's urgency. Thank you.
Thank you, Mr. Commissioner.
Dr. Majila, just to follow up on this review, the governance review. In terms of the board, don't you think the board is empowered to do its own studies or appoint service provider, this kind of providers to do some work that it feels needs to be done without actually talking to the executives? I mean, doesn't the board have that power to have a service provider to do something, or to assign a board member to do some study of sorts? Because if one looks at the MOI, it seems to empower the board to do such things.
I think I don't have a problem with that as long as it's done within the policies of the organizations are clear as to how that is done. Because the Auditor General raises an issue, right? And this issue, I would assume that it's got to do with the way procurement was done. So there was something wrong with the procurement. Not that it was not in the board's authority to appoint a service provider to perform a certain function for them. No. I think there was an issue here in terms of how
In terms of the process.
The process of appointment.
Okay, all right.
Dr. Majila, just before we move on to the next topic, which is the PIC 2014 to 2018, can I ask you, in relation to the growth of assets, we've established that it was under your leadership as CIO and Mr. Masilela's leadership as the CEO of the PIC that this growth was established. There are obviously also other factors to be taken into account, the economic climate, inflows, etc., etc. Can I just establish from you, what were the roles of the CEO versus the CIO, which was you, in relation to investment strategy and the decisions to make good investments?
As a CIO at the time, I was responsible for developing and implementing the investment strategy of the organization. And Mr. Masilela, as the head of the institution, would have authority to approve on whatever I do, which we will then present to the board for approval and adoption and implementation. That is the the roles and responsibilities between the two of us at that time. Sorry, Commissioner.
So do I understand you correctly that you were doing the groundwork, identifying the issues and ultimately recommending the investment to be made?
Absolutely, absolutely. With the assistance of the team, of course.
Sorry, I just feel it necessary to say something here. You used a very interesting word there, CIO versus the CEO. That is, a CEO has the overall responsibility, as Dr. Machila knows, being a CEO, for all things that are there. I don't think it can be or should be interpreted that a CIO performs in the manner of versus a CEO. I think they have different roles, different responsibilities, different functions, and the objective is to ensure the well-being of any organization in relation to a CIO, CEO. I think it's an unfortunate use of words in the particular circumstance.
I think that the use of the word versus, Madam Commissioner, was to illustrate the contrasting roles between the two and not to illustrate the fact, not to a competitive contribution to an investment. It was simply used to illustrate a contrast between the different roles.
I would want to emphasize that a CEO has a particular function in an organization, a CIO, a CFO, all of these positions, which in terms of this, the MOI, should have been in place and should still be in place, and that it is a complementary function for a well-functioning organization. I don't think it is one in contrast to the other. I think it is about a question, because otherwise I have a difficulty in what you're trying to tell us. You're looking, because the way it's coming across is that you're looking at Dr. Machila performing in a particular manner, notwithstanding, and that is not, as I understand it, the testimony. If it is the testimony, then we need a different discussion. So I accept that you didn't use it in the word of conflictual, right? But let's just be a little bit careful about what, because this isn't the first time you're raising the question of his particular role as CIO. Nobody's doubting or questioning that as his role of CIO. You're bringing it up as a question.
Okay.
Dr. Majella, would you then proceed on to paragraph 93 under the heading PIC 2014 to 2018?
Thanks, Commissioner. I'm on 93. In December 2014, I was appointed CEO of the PIC after a fiercely contested interview process chaired by the Minister of Finance, Mr. Nhlanhla Nene. Other panelists were Mr. Mcebisi Jonas, who was the chairperson of the PIC and Deputy Minister of Finance, Mr. Lungisa Fuzile, Director General of National Treasury, and Mr. Roshan Morar, the Deputy Chairman of the PIC. As I've stated on numerous occasions, I stood to serve the PIC as my own man and earn the position through merit and performance, and not as a cadre or a political appointee being deployed by any political party or a faction thereof.
I just want to spend some time on this paragraph, to ask a few questions, Dr. Machila, just in terms of the process of appointing the CEO, and this is sort of part of our terms of reference. What typically happens, just as a first question? And the second question, if you know, sort of how many candidates were there, And the third one is, and this is a big one, typically the CEO is appointed by shareholders. But in the place of the PIC, this is the minister and the DG and the others. So what role does the board play in appointing the CEO? Because, even in many companies, in the private sector, it's done by the shareholders, So if you could just talk through some of the issues there.
Yeah.
And was there an advert, advertised to do that, and just the whole process from your point of view, whatever you can answer and all that.
Yeah. Thank you, Commissioner. If I remember very well, one of the big recruitment companies was used in the private sector. I think it was appointed by the shareholder, I think, on behalf of government. A private company was appointed. The position was advertised in the media, and all processes were handled by this company, including shortlist, and eventually the very short list of which I was part of at that time. The final shortlist, I'm told, had at least 4 other people. And I was interviewed with them and selected accordingly.
You said four other people. Were you you were one of the 4 or the 5th one?
I was the 4th. Yeah, but I think it was at least 4. I don't know if there was. Sorry.
Yeah, and do you know if those 4 were internal or external candidates?
They were external, all external. As far as I understand, there was no internal candidate except for me, myself.
You were the
only
one,
internal
yeah,
candidate.
The only one.
Yes,
Mm-hmm.
yeah, the only internal candidate. That's the appointment of the CEO.
Sorry, can I just clear this? I want to know, were you one of 4 candidates that were finally listed?
One of 4
Or
candidates.
One of 5?
One of 4 candidates, yes. According to my knowledge, there may be more, but I know at the minimum there were the 4 I saw on that day. The 3 I saw on that day, and myself being the 4th.
Oh, you saw them actually?
Yes.
Oh, okay, all right.
Yes.
Like it will be interesting to know who they are, but it's fine. I won't question.
Yes, I had to wait at Treasury for almost the better part of the day for this process to unfold. So, yeah. On the appointment of CEOs, you are right. I mean, and it's probably something that the Commission has to look at in terms of appointment of the CEO of the PIC. That in the private sector, this is driven by the board. The board looks for its own CEO. And I don't think in most instances, even shareholders are involved in the appointment of the CEO. But my understanding is that it's normally driven by the board of directors of the company. Now, in the case of PIC and many state-owned entities, that process is driven by the minister. The shareholder in this instance is the one that appoints, which is, of course, there is participation of the board of directors of the organization. In this sense, PIC was represented by both the chairman and the deputy chairperson in the panel. But the fact of the matter is that it's the minister's process. Shareholders, I mean, you'd expect, in my view, a recommendation from me will be that the board should be the one looking for the CEO, doing all the processes and even shortlisting, and then handing over their preferred candidate to the shareholder for approval. And in that way, they know that the board knows that they are appointing their own CEO that they have control over. If it's done the other way around, there are challenges with allegiance and those kind of things, naturally, you know.
Was there a part played by the PIC in getting the position filled, whether in terms of the advert or the chairperson?
If my memory serves me well, this was done by the private company, appointed by the shareholder to run the process on his behalf, if I remember quite well.
If I can be of assistance, I've just been informed by the PIC Commissioner, the company is Stanton Chase. It's an international company.
The final question here, but it's there was a joke around it, but you are here, let me just ask it, there was a joke that the advert actually said one of the requirements was you must have a doctorate to be the CE of the PIC. Was that correct?
I'm sure.
Any truth in that, can you recall?
I'm sure we can read the advert. If it's there, then it gave me a nice advantage, I guess, which I'm happy with.
Yeah.
I worked so hard for this thing, so
yeah.
if it become handy in some instances,
Yes.
I'll use it.
Because I recall people saying, no, this was like favoring you because there was a doctorate requirement there. And I said, but I can't believe that.
I don't know who put together the job specs. I was just one of the applicants.
Okay,
Yes.
all right. Now we've dealt with it. We'll double check the ad, but I'm sure we've dealt with this issue now, finally.
Perhaps I can be of assistance. I've just been provided with the ad. It reads, qualifying requirements, a postgraduate qualification in business, finance, strategy, or equivalent is preferred at master's or PhD level.
Okay, all right. Okay, but there's a master's there, so
At least yeah.
Okay. It's quite strange though, Dr. Majila, that one would say PhD for a senior position, isn't it? Generally.
I don't know. You're looking for the best candidate, I guess. And more than $1 trillion at that point would have required a bit of understanding of how the market works, I guess. And maybe the assumption is that master's degree gives you that capability, including experience, would stand you in good stead to be able to deal with this mammoth task of looking after trillions.
But do you think the PhD line there did give you some edge or not? I mean, and of course we can ask the people who did the interview, but do you think that thing could have contributed to giving you an edge?
Well, I'm sure it is.
You are sure? You are sure that it could have, yeah?
It could have. Maybe that's why I applied, because I felt maybe there are so many few PhDs around here, I might as well put my name in the hat,
Yeah. But who put together the ad? Do you know?
I have no idea who put together the ad.
So it could be the National Treasury or the recruitment company?
Usually it's done in consultation with the recruitment company.
With the recruitment company. Okay. All right. Okay.
That's how we do it in the PIC. When we advertise for a senior position, we work with the company to guide us, because they have experience and lots of database, and so they will craft an advert with our input, of course. But they would run with.
Yeah, my worry is that you see, when people see a doctorate there, it will scare off a lot of people who wanted to apply, Isn't it?
Yeah.
But of course, you had nothing to do with drawing up of the advert.
Absolutely, Commissioner.
Yeah. Oh, all right, I think let's stop there then. Thank you very much. Thank you.
Commissioner, can I continue? Excuse me. I took over from Ms. Mori, who was acting CEO since the departure of Mr. Masilela. My job was to build a strong, powerful structures on the solid foundation that had been laid by my predecessors. I took over as the third CEO of the PIC in the 10th year since its corporatization. My first priority was to reinvigorate and re-energize the PIC with a new sense of purpose that all stakeholders could buy into with enthusiasm. I, along with my colleagues, started developing the Vision 2030. The objective of this vision was to align the PIC with the global vision that has been set by the United Nations. This would position the PIC on a higher level than the organization had ever achieved in its 100 years of existence. That of a true global investor. A copy of the July board strategy is attached and marked DD4. In this strategic review, we painstakingly analyzed the following: the evolution of the PIC, client requirements, that is mandates, regulatory, legal, and governance structure, operational model. On the operational model side, we looked at people, systems, risk management, and sustainability issues. And then we made quite a number of recommendations of how we could position the PIC. Commissioner.
Dr. Machila, I'm not going to take you through those recommendations unless there's something that you particularly want to highlight, but ultimately you came up with a so-called Vision 2030 ideal for the PIC, which dealt with its investment strategy focus. Is that correct?
That's correct, that's correct.
That is at page 97,
Yes.
paragraph 97 on page 39.
Yes.
Can I take you there?
Yes. Vision 2030, Commissioner, paragraph 97. We say wealth creation is the same as asset growth, and asset growth is fueled by economic growth. The PIC assets under management are significant in relation to the economy at more than 30% of South Africa's nominal GDP. This relationship implies that with a prudent asset allocation or asset selection, there was an opportunity to stimulate the economy through investments and thus create a virtuous cycle that can sustain wealth creation in the long term. The sectors that can stimulate the economy have been well researched and are in the main economic infrastructure, social infrastructure, priority sectors, renewable energy. All of these are the so-called developmental investments, which I highlighted earlier from the developmental policy of the GPF. These sector exposures can be accessed through both listed and unlisted investment in order to build a robust portfolio that contributes to the economy. That's how I position the PIC focus towards 2030, by building a portfolio that drives national development agenda at home and sustainable development goals globally. The PIC has adopted its vision of 2030 premised on thematic investing for economic growth driven by developmental investment in the whole of the portfolio. This approach supports South Africa's developmental objectives and priorities that foster economic growth and drive socio-economic transformation. The vision, which sets out our dream for the strategic objectives of the PIC to be achieved by 2030, was to be the leader in developmental investing for sustainable financial prosperity of our stakeholders. Commissioner, that was our dream of 2030, to be the leader in developmental investing for sustainable financial prosperity of our stakeholders, and then driven by the mission as stated below.
Would it be convenient to take the break now? Let's adjourn until 1:45.
excited about that.
Yeah,
So, what can you do? You want to go outside and discuss things? I don't think now is going to be appropriate. I think perhaps after the time, yeah, I don't, I don't want that to go out at this point. Yeah. Let's have a look at what the end of today brings. No, we won't go to early again. We'll probably go until 4 o'clock. Sorry? Apparently they didn't have the lectures and they weren't really so they wanted an opportunity of half a day to study the annexures and stuff. All right.
you need economic growth for assets to grow.
It appears,
So assets grow in a growing economy. That's what fuels asset growth. And so, we took this relationship and taking into consideration the fact that the size of assets that the PIC manages is almost 2 trillion, which is roughly more than 30% of national GDP. And we said we can actually influence the economy. We can invest in such a way that we influence the economy as opposed to waiting for the economy to drive investments, being proactive. And slide 265, that's DD8, it's the virtuous cycle that we're trying to create in pictorial format. That says that we look for assets that are going to stimulate growth, invest in them. If we get it right, the economy will grow, and that will fuel asset growth, and that's creating this nice virtual cycle out of.
Yes, I think we did hear that before.
Okay.
so, Doctor, then subsequent to your Vision 2030, there are certain organizational structure changes at the PIC, subsequent to you becoming CEO. Is that correct?
That's correct, Commissioner.
What were those?
Following the strategic review of 2014 July that we spoke about earlier, with the board approval, the board agreed to organizational structural changes that will bring in some efficiencies to how the PIC manages client assets. These changes were on 102.1, the reduction of 4 executive directors to 2 executive directors, being the CFO and the CEO. This is in line with King Codes. This ensured the dominance of non-executive directors on the board of the PIC, splitting the CIO's position into 4, mainly executive head of investments, comprising of executive heads listed investments, executive head private equity and structured products, executive head developmental investments, and executive head of properties.
Dr. Machila, can I ask you a couple of questions there in relation to 1021? It's in essence, yes, you have a CEO and a CFO, but you really consolidate power in 2 people. Those 2 people as executive directors, and I would question ensure the dominance of non-exec directors on the board increases. No, you would ensure the numerical number of the non-execs increase, not necessarily their dominance. The question of dominance is often in a board a question of who is the powerful figure, and if the information is there, it is usually the CEO and the CIO. So this may well have had the motives of trying to comply. I think the word dominance is incorrect. I think it is a numerical question, that is, the non-execs would exceed the executives. But the question that really remains, and we have seen in the testimony coming before this commission, the overwhelming power and dominance of those 2 positions, the CEO and the CFO, and the roles that they play, because all roads lead to that Rome. And then the second question I'd like you to address is that under what authority would you have the ability to appoint your executive heads? If I look at the MOI, and you may well have, I want to just understand it. If you looked at your MOI 714, the board shall conduct the recruitment and selection process of the chief executive officer in accordance with the guidelines issued by the minister. And the chief executive officer shall be ex officio director of the board. The chief executive officer shall be responsible for the day-to-day functions of the company and shall be obliged to comply with any instructions issued by the board and any directives issued by the minister of the board, provided that the board remains accountable to the PFMA. The Chief Executive Officer, 7110, shall make recommendations to the board with regard to the appointment of the CIO, CFO, and Chief Operations Officer of the company. So that your MOI deals with the previous structure. In terms of shifting away from this, did the board approve your ability to make these appointments? It obviously approved the change of two directors because that's what became the functional approach. But on what authority, given that your mandate in the MOI is different from what was actually implemented? Was there a board resolution about 102.2 and the appointments made?
– 102, as you said, in terms of the composition of the board, non-executive directors, majority increases because of lesser executive directors. In numerical.
It would anyway, because you have, in terms of the MOI, if the objective was to increase the number, it would not have required you to reduce the 4 to 2, because your board, the MOI enables you to have a board between 10 and 15 people. So if you had 4 execs, as you had originally, CIO, COO, CEO, and CFO, you could have a board of 10 or 12, and you would still have a numerical dominance or majority in a board. It would not have required reducing it to 2. So the reduction of the 2 would have been for different reasons than to have an executive, a majority of non-execs.
Commissioner, for me, reducing the number of directors or executive directors improves the dynamics of the board. As I said, the dominance of non-executive directors. But most importantly...
not from the evidence that's come here. You've got a very fractured board in full dispute with everybody, each other and the CEO and everybody else. So the question of the number does not seem to be the material question. The issue that I have here is it's not to increase, you did not have to do this to increase the numerical majority of the non-execs, because you could go up to 15 members of the board. And therefore, the concern that I have around it from all the evidence to date has been the dominant role of the 2 executive directors, that instead of having a more balanced executive in the board, you have got a CEO and a CFO that has resulted in the evidence that has come before this commission. So with hindsight, it may have had the good intention at the time. This is 2014, it's 5 years later. With hindsight, has this proved correct and effective and achieved the results?
The benchmarking that we did around this was with IDC.
I don't want to go into benchmarking and the reasons for it. I'm asking you at a practical level, because the PIC is a unique organization, and we can benchmark all over. The question is, with hindsight, has this been an effective decision, given all the evidence that you've heard in this committee, in this commission?
Commissioner, obviously I have reservations against some of the evidence that was laid before this commission. I have a strong belief that this model has done well. And in my evidence, you will see where the wheels start to come off around 2017. From 2015, ever since we put together this new structure, the PIC was functioning exceptionally well.
So you don't regard that having 2 executive directors only is too much of a concentration of authority?
If you fix the delegation of authority to give executives, even if they are not executive directors, but they are executive with executive powers through the delegation of authority, you don't need them to be executive directors. They can still perform without being directors of the board.
I
because
accept
they are.
That's not my question. My question is the concentration of power and authority in 2 individuals. Given
I don't see
you don't think that that was a problem?
I don't see concentration of power because the delegation of authority allows executive heads to perform certain functions that were performed by the CIO for the total investments of the PIC. We've
But
broken
they report
the...
to two individuals. The CEO and the CFO have all the reporting lines of management to them, including executive heads.
I think...
And I'm asking only whether you are comfortable. You can be perfectly comfortable and say that you're quite fine, that this, in your view, this does not have a concentration of power, and that's fine. I'm just wanting the answer from you about the concentration of power in two executive directors.
Commissioner, I was very comfortable with this structure. And I'm convinced it worked exceptionally well.
And then
And
let's
you
move
will
on to
see
102.
where they will come off.
Can we move on to 102 as to the authority to appoint? Was there a board resolution to enable that?
Following the restructuring of 2015, the board agreed to change the MOI that recognizes all these changes. And we even filed it, sent to the minister for signature. At that time, the minister was Nhlanhla Nene. And I do discuss that later on, that MOI was not signed. And we can produce a record of where we have reminded them several times that there is an MOI outstanding. Now,
So
I'm sure the Commission might say...
The MOI was not signed by Minister Nene at the time.
It was not signed with the change, the amended changes, recognizing the new structure when it was not signed.
Do you get any reason from the minister why he was not signing it? Was it a question that he had a difficulty with the content, or was it just a question that you don't know? It was sitting on his desk, and for what period of time, from the time you submitted it to the time it was changed by Minister Gigaba at the time, back to the original, what time lapse was there? Because this is again 2014.
This is 2015, early 2015, when the MOI proposed changes are made to the minister. And for a long time, they don't sign until they were removed. I think it was in December 2015. So it would have been a period of 6 to 7 months that they had not signed the MOI. But then Minister Godan came back after Mr. Van Rooyen's short stint. And again, after several reminders, that MOI was not signed. It was only signed, I think it was on the 30th of March 2017, which recognizes all of those changes that we are proposing to the minister.
It took almost 2 years.
It took almost 2 years.
And in that period, was there any querying of the changes?
There has never been
So
any
it was
queries at all.
signed as you submitted?
We have made, as I said, made numerous reminders to Treasury without much success.
Yeah, but I just want to be clear that there was no feedback to you, we're not signing for this or that reason.
There was no feedback.
It was signed exactly as you had submitted roughly 2 years later.
Absolutely.
Okay.
Absolutely.
Thanks, you can continue.
Okay. I think we're on our 102.3. In putting together the executive team, I considered the following: talent internally, a young team that will be around for 10 to 15 years, like myself, motivated, committed to the values of the PIC, and most of the appointments were done internally.
Just a question here, Dr. Majila. The external versus internal candidates, I mean, roughly what was the percentage of PIC filling your positions in terms of the percentage, on an annual basis between external and internal candidates? Because, sometimes internal candidates inject some external view and, they can bring some different ideas to the table.
I think at executive level, it was mainly internal candidates. And the reason being that at times you want to preserve the culture. Indeed, I mean, the external people can bring some life into the organization, some new ideas, we recognize that. But sometimes the culture can be under threat, especially if you do it on a large scale. You may end up with a different culture altogether. And of course, that happened, that became apparent once we started recruiting from outside and we ran into problems very quickly. Hence, probably this commission that we went outside. I mean, that's the fact of the matter.
So you went to get senior people from outside and they upset the culture. Is that what you're saying?
It appears that's what happened in this instance.
So you sort of prefer to promote from the inside with the senior people and then get the junior in the middle. You can sort of recruit from the outside. Is that what you're saying?
And the fact that the people who eventually occupied executive positions were part of the crafting of the new strategy. They were actively involved in putting together the new vision of PIC 2030. And naturally, they would understand what this dream is about. And they showed alignment with what we wanted to do at that time.
All right, thank you.
Can I just take you back to paragraph 102.2?
2 point?
102.2, those proposed changes. Did you implement them before the signing of the MOI?
Yes, the board had resolved that we could make these changes.
So for some time you operated contrary to the provisions of the MOI?
That's true. That is true, Commissioner.
Dr. Machila, then you also consolidated the FIPS from 4 to 3.
Yes.
You established the Departments of Research and Project Development and Portfolio Management and Valuation to manage post-investment portfolio monitoring and ESG risk. Is that correct?
That's correct. These were very important departments which we didn't have in the past. So strengthening research and project development will give us ability to be innovative, driving our portfolio investment process on the back of strong research internally. And most importantly, the portfolio management team will give us capacity to start monitoring our investments a lot more actively, including implementation of our ESG strategy, environmental, social, and governance strategy, so that we can sustain the portfolio in the long term.
Thank you. And then we have the appointment of Ms. Beswick and Toyi to the board.
Again, this new structure, in the new structure, we recommended to the shareholder that rather than have experts being experts and not necessarily officials of the PIC or tied to the PIC in the form of directorship, that we should convert them into full directorship for accountability and responsibility purposes. And the minister approved these appointments and cabinet as well.
Okay. And in response to our query earlier, those appointments occurred during the 2015-2016 financial year.
Yes. I think, Chair, it's very important when we say we're doing all these activities, we're making all these changes. These are board resolutions. It's not the CEO that decides that I'm going to do this change, I'm going to do this change. We recommend and the board is the one that approved all these changes and recommended those that require shareholders' approval to the shareholder to approve. I thought I should make that clear.
Just to check something, so in terms of 102.5, the PMV division, did you monitor, the assets before you established it, or you just put it together and formed it as a PMV division?
Sorry, Commissioner, I didn't understand your question clearly.
The PMV, when you set it up, were you monitoring the investments, or you started doing that by forming PMV?
I think the question is, were you doing it before? Were you
Before?
monitoring
Yes.
Before you set up the committee?
And then combine it to form-
It was done, but these were two separate departments. We would have ESG for listed investment, ESG for unlisted investment, and PMV dealing with post-management valuation for unlisted investments. But then we combined all of those because we realized that PMV activity should also focus on the soft issues around our investee company, which is environmental, social, and governance, and have a total picture of the operations. So that's why we combined PMV and ESG to form a bigger team.
All right, thank you. Thanks.
All right. And then the memorandum of incorporation, as you've already described, was eventually amended to reflect those new changes. And at some point in time, we know that Minister Gigaba wanted the old memorandum of incorporation reinstated. But you say that may never legally have been done, but that issue is dealt with later in your statement. In respect of the legal and regulatory operating environment, you say that you experienced a great deal of pressure from senior politicians of most parties, very influential people in various fields, and business people who, for no other reason other than entitlement, felt that their business ventures or those of their associates deserved to be financed by the PIC.
Yes, the operating environment of the PIC it can be very challenging, and in particular on the unlisted investment side, Commissioner, the financing of BEE has always been a challenge for us. Some of the deals that we will discuss, some of them are sensitive, of course, and we've engaged with the evidence leader to see how we can do that in the best possible way to protect ourselves as well. And all we're saying here, it's been difficult to manage this environment effectively.
Can I ask you both as CIO and then as CEO what you did about it? How did you handle it, if anything?
I think, Commissioner, by and large, we have been open and transparent to whoever approaches us. Most of the time, rejecting deals that don't work
No,
can
I'm
be
not
a big
asking
challenge.
about that. I'm asking about practical steps. Minister X says to you, please come to the airport and meet me. What do? Minister X is not the minister that is your shareholder. There's a difference between the Minister of Finance, who is the shareholder representative who needs to see you, any other minister or interested or affected party. What do you do? What did you put in place to deal with this problem, a very real problem? What did you put in place as CIO, CEO?
I think for me it's very important that I recognize them as ministers and listen to them. And
Would
discussions.
would you go to the meetings on your own?
Sometimes I do go to meetings on my own.
Would you have minutes recording those meetings? Would you take minutes of those meetings, confirm in letters what occurred? I mean, I'm talking about taking steps that protect the institution and the integrity of process. If there's one-to-one meetings, how would you say this is what occurred? I mean, it's something that if we're wanting to take steps, what I'm asking you as CIO, CEO, Minister X asks you to come and see them at the airport. Do you go with somebody else? Would you go on your own? Is there somebody to record the minute? Is it recorded? How do you protect the organization if it's a one-to-one meeting and any minister can call you up? Taking this point you're making into account, I would really like to know what steps you took to protect the organization and the integrity of that engagement, both from your side and the counterparty.
Well, I'll have to think about that carefully, but all I can tell this commission is that the mandate is clear of the PIC as to what needs to be done. And if the minister calls me to a private meeting, I will honor that.
Why? Minister X that has nothing to do with your portfolio, or MEC X, or businessman X, or company CEO that calls you to a meeting. It's not to say that you don't go to the meeting. What I'm asking is that, and with respect to all of those parties, given the points you're making here, it's different if there was these were not the issues. But you've raised a very, very critical question in paragraph 104. And therefore, I'm asking as a responsible person to protect the integrity of that investment that you have throughout this hearing told us of what the size of the assets under management are and the attempts to influence decisions, the measures that you take that protect that engagement. It doesn't mean you don't have the engagement. It just means it's done in a particular manner that protects the way in which that discussion, transaction, and integrity is done. It doesn't mean that you don't have the meeting. I'm asking what measures you took in place. And that's why I'm using some examples. Would you have a person accompanying you who takes minutes? Would you go with X, Y, or Z to ensure that there is more than one of you? Would you meet in your premises if you go to their premises? Who else is present in that discussion? These are the things that would address, in my view, these questions. And I'm asking you whether you took any of those kinds of steps to protect or to deal with what critical issues you've raised, not only in this paragraph, but highlighted in paragraph 104.
Commissioner, I've been able to protect the organization. Whether I meet with the minister in private or with people in the presence of people, it depends on the circumstances. I've met ministers with my colleagues for various reasons. They've asked for private meetings, but private meetings do not translate into anything other than not doing an investment according to the way it should be done. The biggest protection for me has been process. If for some reason the minister says, I want you to do X, Y, and Z, we will say to them, this is the process of the PIC. And I've engaged with many ministers that are not necessarily directly involved with the PIC, but they are important to the activities of the PIC. Can be minister of...
I accept all of that, and we don't need to go into which ministers. What I'm raising here, and we can move on from it, is that you've raised the question of pressure from senior politicians, influential people, and so on. And you have, and I wanted to know what you'd put in place. You said you protected it by the process. That's fine. You've answered my question.
Then, Doctor, there are certain governance and organizational structures which are put in place in order to align the PIC to the Vision 2030 strategy. Is that correct?
That's correct. That's correct. And we give some of the board resolutions as part of our recommendations to make PIC a lot more effective. That will be on 107, where we combine private equity and Africa FIP and the priority sector and small medium enterprises into one FIP, to be known as private equity priority sector and small and medium enterprises FIP. And we also retain the social and economic infrastructure, environmental sustainability FIP, and established formally a property FIP. So we reduced the FIP from 4 to now 3 to make the operating environment more efficient.
And you then organize EXCO into the following, a portfolio management committee, known by the abbreviation PMC for unlisted investments, a PMC for listed investments, and a PMC for property investments. Is that correct?
That's correct. This will be PMCs that mimic the structure of the FIPs.
And then you make various changes to operations by the establishment of various committees.
That's correct. We established the Information Technology Risk Committee to feed into the Audit and Risk Committee of the PIC, Human Resources, Employment and Pension to feed into HR, human resources related issues, Corporate Services, Client Relations, Finance and Valuations.
Then you deal with the executive responsibilities as a division between yourself and the CFO.
Yes, what is important here is that we now divide the portfolio into two, between the two executives. The CEO deals mainly with investments, and the CFO takes responsibility for operations, but that includes property as well, in terms of the reporting lines.
And then whilst we're on the reporting lines, what were the direct reporting lines then to you?
My direct line of report would have been Executive Head of Listed Investments, Executive Head Private Equity and Structured Investment Product, Executive Head Developmental Investments, Head of Company Secretary, Head Internal Audit, Executive Head of Risk, and Executive Head of Research and Project Development.
And the direct reporting lines then to the CFO?
The CFO will be responsible for property, PMV and ESG, human resources, information technology, legal and governance, as well as corporate services and finance.
And then you further say that you had a policy of growing talent, especially previously disadvantaged individuals, and from those ranks that new EXCO appointees were appointed. Is that correct?
That's correct. In paragraph 112, we show the notable promotions. Mr. Ernest Nesane become legal and governance executive head. Paul Magula, who appeared here, executive head of risk. Mr. Madavo, he also appeared here. Listed investment, Sholto Domolamo, research and project development, Ms. Rubina Solomon taking responsibility for PMV.
Mr. Rudolph, it seems to me that your introduction doesn't shorten matters but lengthen them instead.
I'm trying my best, Mr. Commissioner.
Yeah.
Sorry, just on that paragraph, how do you feel about those particular names you've mentioned, Mr. Nesane and Mr. Magula in particular, as your sort of notable promotions, and what has come to light?
Extremely disappointed.
Were you aware of their non-reporting around the VBS? And obviously we're coming to VBS. Were you aware of the matters? And it's a very important question in relation to nominee companies, yes, and who is sitting on those boards as to reporting and fiduciary duties.
Absolutely.
Were you aware of anything untoward at VBS from either Mr. Nesane or Mr. Magula?
They never reported most of the things that then became public.
And have you considered, at the time and previously, I think there was a workshop referred to by someone giving evidence where it was suggested that there be an agreement, a side agreement, with any company that the PIC invests in above a certain amount and where you've got a board member, that there is an agreement as part of that investment that there is a line of reporting, a fiduciary duty to the PIC as well as to the board. Was that ever considered, discussed, and particularly in the light of not only non-reporting about what's happening, but the allegations contained in the assessment and report of VBS that both parties, Nesane and Magula, were paid to turn a blind eye? Have you considered the role and fiduciary duty of PIC nominees on investee companies?
We have, I mean, now that we know the shortcomings and the challenges, we were on the verge of revising the policy to try and mitigate those situations to a point where we were even thinking that it may be inappropriate for employees of the PIC to represent the PIC on nominee companies, rather have a completely different arrangement where you pull together possible directors with experience and you give them the mandate, and the law, according to what we understand, does allow the PIC to expressly say to the director, you shall report on these matters. Of course, those reporting requirements will have to be cleared by the board of directors of that particular company. So at least they know that they have obligations to report to us. But what's more important is that the employees of the PIC sitting on investee companies is part and parcel of their performance, and they will be measured in their performance scorecard. That will be taken into consideration as part of their activity. So that performance of reporting on material issues or significant issues that are happening that may affect our investment become very important. If they don't do that, it will be taken into consideration.
But also the question in relation to this is these are two executive heads. Is it appropriate for an executive head, risk, for instance, or legal, to actually two of them sit on the same board? And at that level, is that appropriate? If I'm head of risk, I've had to have signed off on the risk of that entity for submission, and then I sit on the board. Is there not a conflict of interest apart from the reporting lines to have this level of your head of legal, head of risk, who would have had to sign off for the investment to take place, to actually be board members?
Absolutely. I mean, there is a conflict. I'm sure someone with integrity would have done it differently.
Not somebody with integrity, the appointment made. It's not about whether, even if they behaved with integrity, the question I'm asking is that given their roles in the PIC in relation to the investment to be decided upon, is it appropriate for them to actually be your representatives on the board? Is there not a conflict inherent in that?
Yeah, I mean, clearly we can see that there's a problem there. Now we know that that should have been handled differently.
And you were CEO at the time?
Yes. Yeah. And again, it's important to understand that I didn't put them there. There's a DAC that approves appointment of nominee directors.
Sure,
and
but you
the
as
board.
a CEO...
So it doesn't appear as if I decided to appoint them.
I understand that. You have a DAC that does that, but the question I'm raising as a CEO, these are your executive members, they sit in your committees, they know all kinds of things, they're part of, as you've just explained, creating a team with executive heads. Yeah. As a CEO, if you had a concern, I have no doubt if you had raised that concern with the DAC, they would have heeded your concerns. Or did you raise any concern with the DAC about such deployment?
We were comfortable at that time. that they will be able to do the job. Knowing
Thanks.
who they are, and I do discuss that in the HR matters as well, that we trusted them, that they will do the job for us.
You're holding a different view now as to who should sit on behalf of the PIC
Yes.
on investee
I
companies'
do,
boards.
Commissioner. I do. I believe, if I may, I believe that the PIC should separate that activity and probably establish a new pool of directors that are independent of the PIC with the requisite skills and experience and be deployed in these companies and with a clear mandate on the reporting requirements so that they liaise with PMV in terms of reporting.
Okay.
Mr. Commissioner, I'm sorry, can I also chip in here unless I forget it? And Dr. Bachila, on this same score, would you agree that it would also then include the Chief Financial Officer of the PIC?
That's true. I would say it should include PIC employees, Commissioner. PIC employees as well as non-executive directors of the PIC. Because if you understand what the PIC does, it's about investment, and we're investing in unlisted and listed investments across sectors, across industries. Now, if we are not careful, we may end up on the wrong side of the law, especially competition law, that most of the time when we file for deals and so on, they will raise those matters to say, you have to be very careful because PIC may end up being a ground for potential collusion if we don't manage our activities on the boards of these companies. That's something that needs to be considered.
So just to be clear, are you saying that the PIC people and the board shouldn't be on the boards of the companies, the investee companies? Is that what you're saying?
What I'm saying is we have to be extremely careful. The PIC has to be extremely careful as to how it deploys directors on investee companies. For example, if someone sits in the investment committee, they see a lot about different companies in different sectors. And at the same time, if they are sitting on a company and we discuss a company, a rival to the company that they sit on, it may be problematic because they would then get insider information on some of the companies that are being presented by PIC employees. So it really raises a serious risk if we have to deploy IC members on investee companies, because that may create serious problems of competition or breach of competition law.
Yeah, just another one on paragraph 111. Reporting for property to report to the CFO. What was the reasoning there?
The reason here is that the CFO had spent quite a bit of time on the property side of the business. At the time where we were trying to create a subsidiary out of PIC, PIC Real Estate Asset Managers, she was part of that process, and she played the role of CFO for properties division. So she was very much familiar with the properties. That's why we decided that she can carry on oversight on that part of the business.
Okay.
113, if I may, Commissioner.
I think, Mr. Rudolphs, let him go ahead, but if you come across or realize that a particular paragraph we can skip, please interfere.
I'll let the reins free, Mr. Commissioner.
Okay. Okay. I hope I'm not going to run like a stray dog now, but I'll do. Commissioner, 113, we split the company secretariat into the board secretary and the company secretary. On 114, from 114, we deal with the performance of the PIC.
Perhaps I can assist the
Do you
witness.
think it's necessary to go through?
All I'm saying, Mr. Commissioner, if I can place on record, from 114 to 143, that evidence is before the Commission, unless there's something that Dr. Machella would like to emphasize.
Dr. Machila, is there anything that you'd like to highlight in those paragraphs?
Yes, Commissioner, I'll be very quick because I think I need to blow a vuvuzela here. It's that's the only time that we can do that. All we're highlighting here in the terms of the investment approach is an understanding of how PIC approaches investment, how we put together a portfolio. And we've talked about benchmarks yesterday at high level. It talks about benchmarks for listed and unlisted investments and the asset selection into listed and unlisted investments. By and large, that's what this paragraph is about. And also investment governance, dealing with the regulatory bodies that are responsible for monitoring PIC activities, FSCA, as well as FIC, the PMC members being representatives, in other words, approved by the FSCA to conduct investment activity of the PIC in terms of the law. It's also very important to understand because they must have passed certain exams. They must have minimum qualifications, the so-called fit and proper test, so that whatever, which we'll discuss later on, whatever instrument they deal in, they know, they understand how they work. If they trade shares on the JSE, they need to understand what it takes and what are the rules of trading shares on the JSE. In initial public offerings, all of those things need to be known upfront. And what a PLS or pre-listing statement is about, they need to know all of that. But we will discuss when we come to specific deals.
Doctor, if I can take you to paragraph 131, which deals with the investable universal opportunity set as defined by expected long-term economic trends, and refer you to Annexure DD 11, which is page 268, Commissioners.
Thank you, Commissioner. This 268, it's an important slide because it gives you a sense of where the PIC is focusing as we build the portfolio. What are the sectors, what areas? And so you will see that the thematic mega trends that we follow from ICT, focusing on sectors such as agriculture, mining beneficiation, manufacturing, energy, those that are capable of stimulating the economy, including ICT. And we will show where IO is located in this table here. So any investment that PIC puts money in must be located somewhere in this picture here. Thank you.
This, sorry, Dr. Machila, so this diagram, does it deal with listed or unlisted companies?
It's both listed and unlisted.
Both listed and unlisted.
So the idea, Commissioner, if I may, briefly, I need to find this page so I can explain something very important about this picture. So in short, we know that these are the sectors that are going to drive economic growth. Now, in the listed space, there are JC companies that are already playing in this. And the mandate is clear as to what proportions we should be putting in those companies. But when you invest in the JSC, you invest in what is listed. You're not necessarily going to get all sectors represented in the manner that you need. So that's where unlisted investment becomes handy, because then you can build a portfolio that also gives you exposure to those assets that are not represented on the JSC. And in that way, you get a much better portfolio that is balanced, that is going to drive economic growth or benefit from economic growth. That is the key reason for unlisted investment, in my view. That
So-
it should be enhancing the portfolio structure
Yes.
to give
Meaning
you
that-
full exposure
sorry,
to the
yeah.
economy.
Yes, yes. So meaning something like a current beef then will fit in nicely, because on the JSC, you don't have a beef, an agric company with a beef, element.
Absolutely. Renewable energy.
Yes.
There aren't many such big companies on the JSC, but then you can get them in unlisted investment.
Yeah.
Investment that are, they are very small, like Gaia infrastructure, and so they're still very small. But then in unlisted investment, you can get that exposure easily, So if you look at 142.1, if I can take you there, Commissioner. Another matter that we have observed over time is the structure of the JSC itself, JSC All Share itself, that probably the top 10 companies which account for more than 50% of the market capitalization are not exposed to the local economy in the true sense. Naspers, Tencent, China. Right? You've got Enhauser, InBev, they call it. It's all over, big company. BAT, Richmond, and so on and so forth. You got these companies that are not necessarily exposed to the local economy, but they are big on the JSC. And pension funds in South Africa are invested in the JSC. I mean, we're talking about trillions that are invested in the JSC. So you're seeing pools, large pools of cash, not necessarily being exposed to the local economy. And we saw in the past few years that the economy has not grown. But there were instances where the stock market was hitting new highs when the economy was not growing. So there is that disconnect. And so a big fund like the GPF should be refocusing on, of course, other funds as well that really wants to get the economy going, should be adjusting their benchmarks so that they contribute to economic growth as well. Because those large pools of cash are not there. So unlisted investment within the portfolio, a PIC portfolio environment, can be helped to deal with this problem to some extent.
Just a broader question which sort of bothers me about pension funds also is that, I mean, pension funds have got more than 4 trillion rands, I mean, besides the PIC. I mean, why aren't they investing the money here in private equity, in other, non-JSE companies? Because that builds up the economy. I mean, why aren't they doing that? What's your thinking there?
I think, Commissioner, we spoke about the asset allocation. that should be the determinant of where managers should be putting their money. Now, if the Board of Trustees believe, and I think this is the case, believe that unlisted investments are very risky, there is that misnomer that unlisted investments are very risky. But we've seen in the past that even listed investments are actually risky. In fact, when they collapse in a spectacular way, like we saw with Steinhoff. I think it's an issue of education. It can be legislation. I believe the Regulation 28, the Pension Fund Act, does make an allocation towards private equity. But there isn't much money that's going into private equity. Probably that conversation needs to be had to say, can we start fixing the economy? The president is raising around 1.4 trillion, but there's a 4 trillion already that could be channeled towards private equity and drive this economic growth a lot faster.
Yeah, which brings up the feared word called prescribed assets, basically.
Absolutely.
Isn't it?
Yes. Yes. Now, you don't want to be driven by prescribed assets. It's better to do it voluntarily because that's the only way you will get your assets to grow when the economy is growing. Yes. You know, and there has to be that understanding that let's invest in the economy. If it grows, assets are going to grow. That virtuous cycle that I spoke about. If we all the funds focus on this idea, they can change this economy a lot faster. But you will need, and I believe we have the talent on the ground to drive private equity. Most private equity managers out there, they are very small that are there because the pools of capital are not finding their way in there, you know. Something that needs to be thought through carefully. And maybe they be cajoled to seeing the bigger picture of what private equity can do to the economy.
But I suppose with regard to the GEPF, that lies in the hands of the trustees, Board of Trustees of the GEPF, am I correct?
In fact,
is the relationship between the PIC Board and the GEPF Board of Trustees not such that advice can be exchanged?
Commissioner, the GPF has moved at least. I think they've now allocated roughly 10% to unlisted investments. And there's recent indication that they may increase that, which means the PIC will have to then up the game in terms of ability to manage this kind of pool of capital. And in my recommendation, I have also a structure that I believe can assist, which is something that I was about to put together just before I was asked to leave. How to best manage unlisted investments through the experience that we had in the past, applying that to make sure that the pools of capital. So the GPF has made some contribution. It can make more. The other funds are also under the control of Board of Trustees. And Commissioner, they just need to be educated, cajoled into understanding the importance of private equity. If it's done properly, it can really make a difference to the economy. So they can then adjust their mandates to take care of that. Yeah. Execution of the mandate, I think we have discussed that. Of importance is that we have outperformed benchmarks, Commissioner. A manager is measured according to how they outperform benchmarks.
Sorry, I thought we were on Para 143. I didn't think we'd gone to 145.
Sorry, Commissioner, I dealt with 142.1, and then I was racing straight to 145.
Yeah, I wanted to go back to 143.
Okay.
Because it relates to the earlier discussion about influence,
Yeah.
political influence and the steps taken. Yeah, and so part of the question that I would have here is that there is a bit of a contradiction in the structure that I would ask you to talk to. The rule that non-execs play no role in the daily management or operation of the company, and it comes back to a paragraph earlier, if I can just try to get to it. It also relates to paragraph 122, when you deal with non-executive directors who serve on the investment committee and the kind of skills and the fit and proper question. Does that not relate to the fact that the way you have structured the role of the board is to, in fact, involve them in the affairs of the business? If you take a board and you appoint the appropriate people with the appropriate skills, you wouldn't be having to say they need to pass an exam or be approved, because you would have people whose work that is, and they should have that as part of their skill set. You can't, I mean, you raise the question that the executives have to pass exams, but non-execs don't. Well, if you're appointing a mix of non-execs, if my expertise is X, I may not need to have that. But if my expertise is Y, I have that, and because I have it, I'm appointed as a non-exec. Right? So you create the skills accordingly, and that for me would deal with your paragraph 122. But by the very nature of involving your non-execs in the investment committee and in the FIPS, they're involved in the work of the manager, effectively the functioning of the business. So you can't have it both ways, which you say here,
Yes.
that you're saying that's totally contrary to the rule that the non-executive directors play no role in the daily management. They play no role in the daily management of HR, whatever, other than through their board subcommittees. But the structure has involved them in the executive functioning through the FIPS and through the investment committee. And there is a contradiction there for me around the role of the board, because you're bringing them in at one level and you say stay out at the other. You want them to have the requisite skills, but they don't have necessarily. And if you look at the delegation of authority, there is virtually no reference back to the board as a whole for any investment decision. I think it's above 10 billion, it might go there, but if you look at that list of delegation of authority, everything is dealt with through the investment committee and the FIPS. And therefore, as the board as a whole does not look at those issues from the way the structure is, and it crosses the line in relation, if I'm on the investment committee and on a FIP, who oversees the governance when I'm sitting in the position of overseeing the governance as the board member? So there's a contradiction in the structure, and I'd like your view on that.
Commissioner, let me try to explain this quickly, if I may, and my thoughts around what needs to happen, you know. I've raised this with the FSB about why are non-executive directors not required to pass exams, because they're almost performing the similar functions as management. That was my understanding of approving investments. And the answer was, but they are approving your recommendations. So people on the ground, who is management, who are doing all the work of putting together these proposals and making recommendations, those are people who must pass the FIRES exams, because they are making recommendations. And the person who's deciding on whether to do something or not do something, the FSB still looks at the qualifications and understanding at least a minimum that is required for them to say yes or no in an informed way, understanding what the representatives and key individuals are saying to them. That is my understanding of why they may not be required to pass FIRES exams. But in the structure that I'm envisaging into the future is the one that says, can PIC allow the regulator to do slightly more, the same way as the Reserve Bank will approve directors that sit on companies, on banks, or directors that sit on board of banks. They are approved by the regulator. Perhaps the regulator can also play that role and ensure that whoever sits as a non-executive director, at least they've been vetted properly and cleared, and yes, that was the
I
thing.
think that's something that certainly the regulator should look at, because, I mean, there is the question of fit and proper from all kinds of reasons. And if you looked at the way it is dealt with in the Reserve Bank in terms of bank supervision, the regulator also has the ability to remove a director.
Absolutely.
And to block them from ever being a director on a board of a bank if there has been malfeasance and corruption. So it is certainly something to look at. But what I'm raising here is that the question of fit and proper in that sense is one aspect. The requirement to have a qualification should be considered in the appointment of the board in the first place. So that it's not about saying, I've come onto the board, now I've got to take an exam. It should be the skill set that is required to make it a competent board. And all I'm raising with you at this moment, because I think those are recommendations, and we obviously have to consider the views on recommendations, but what I'm raising is that the structure that you have created crosses the line for non-execs to be involved in an executive function as distinct from the role of the board as a whole. And therefore the role of the board in this structure for me raises the question of who oversees the functioning of the non-execs when they are involved in activities of that nature, but are the very board members who have to oversee their own activity. All I'm raising with you is that there's a contradiction for me about the functioning, and then your concern about them playing a role in the executive functioning of the organization is created by that very question of having them on the investment committee and on the FIPS. So there's a lack of clarity about that role. So all I'm raising with you on it is that it's something that perhaps with hindsight, you would reconsider the role of a non-exec, and clarity on whether it is a governance board or whether it is in fact having executive function. It can do both, but then you require different things.
No, I understand. I thought the fact that there's an executive committee in EXCO in the PIC will take care of that distinction between the board. Or thinking of the current board as it is as a normal board, and an executive board being EXCO in this instance. I thought that would help in terms of the distinction of roles.
Thank you.
Thank you, Commissioner. Commissioner, quickly, if I may, I will skip some of the slides. I'll go through some of the paragraphs very quickly. In terms of the successes, we've grown the team in 2003 from 10 or about 35 employees to about 350 now.
And where are you now?
About 350.
No.
On paragraph 146. And most importantly, we have a good gender balance, or our employment equity looks good, report looks good. Black women have been given a chance. I think we've done well in terms of the composition of PIC employees. In terms of the returns, we've outperformed benchmarks quite comfortably. If you look at the annual report of the GPS over a 5-year rolling number, we've exceeded the benchmark by 252 basis points. And we've done the same, not only for GPF and other clients as well. So we have quite a significant value add over and above the benchmark through the investment strategy that we have adopted and the execution thereof.
Just another question here. Maybe if you could add some color to this. Since 2008, with the global financial crisis, just sketch briefly how the markets have performed in the PIC, both in terms of the stock market, the bond market, you know, and your positioning in the property market and all that since 2008 up until now. Because I know around 2010 the markets were still low, but recovered and all that. But since 2015, the equity markets have been performing less well and all that. So if you could just give us some color around the performance of the markets and how the PIC was positioned to benefit from that or to lose from that.
I think one thing that we must remember is that PIC portfolio is quite big. So we don't easily move in out of positions as we please. So we have to put down long-term positions. Sometimes we ride the volatility for longer periods. But what I can tell the Commission is that the investment strategy that we've put in place has delivered for us. The maintenance of the portfolio that we don't do on a quarterly basis necessarily, in other words, in terms of changes, but as and when it's required, because we are a long-term investor, has really paid off in terms of delivering value. From 2008-9, when investments were cheap, the PIC portfolio was cushioned by the level of asset allocation. But when the market started turning in 2010, we were able to respond by increasing our position in equities to take advantage of the recovery. And you can see in our asset allocation how we have moved between being too overweight to underweight and then building that overweight position over time as well. We were very low in properties around 2008-9, to a point where when the market started to turn, we then took positions in listed properties in order to make up for our underweight position in properties through your growth points, SA Retail Corp, which is in the retail space where we were very much underweight. So we took those last positions to make up for our underweight position, and we were able to ride the curve in that way. And from 2015-16, we could see that we are going to face headwinds in terms of economic growth. That's when we made an application to the GPF to allocate more funds into unlisted investment with the view of starting to invest in the economy. We also persuaded other clients like the UIF and Compensation Fund to start thinking about their visions as well. These are Department of Labor funds, and we're saying you're sitting on large pools of capital. The fund has grown phenomenally. The liabilities are covered more than 5 times. And we're saying, can't we just allocate a certain amount, even if 25% of that, towards job creation and saving jobs when such challenges present themselves? They listened, they were able to allocate, but not what I think was significant enough, but they are moving in the right direction in terms of making those interventions using the money that they have at the moment. So if I had prepared a detailed attribution, if I had known that the commissioners would like to see some kind of high-level attribution, we should have done some, sure, but the PIC can assist. So in short, we were looking at increasing allocation into unlisted investment in order to deal with the headwinds that we're seeing in the economy.
Yeah. And the way you are positioned now, I mean, going forward, given the poor economic growth, I mean, do you think the performance of the PIC will continue to do well? I mean, given the dire position which we find ourselves in the country?
Yeah, I think the performance of the PIC on the alpha side will still see outperformance. The challenge is the growth in the assets themselves may be a challenge, and the actuaries were here. I think they presented before this commission to say the funding ratio is deteriorating because of low economic growth. But PIC cannot do much because the mandate says this is the structure of the asset allocation that we need to follow. If the client says, let's be aggressive and start stimulating the economy by making adjustments, I'm sure the PIC will be able to respond to that accordingly and start driving economic growth and hopefully mitigating the trend that we are seeing at the moment.
Yeah, so if we go further, I mean, this ratio of assets and the liabilities could worsen in the years, you know, forward, going ahead.
Absolutely. If the economy doesn't turn, we'll have problems. We'll have serious problems.
Okay, the rest of that question you can answer after lunch.
Thank you.
We're going to take the break now. How is 1:45 for coming? We'll adjourn until 1:45?